of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential and change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at seic.com/C's change.
NJIT makes innovation happen. It also makes entrepreneurs like Anya O'Dwyer. Founder of Innovate, a tech-driven civil engineering and construction management firm, Anya says NJIT is defining the future.
NJIT is extremely important as a hub of disciplines, all in one space, with all of these brilliant minds. NJIT's role is huge when it comes to defining the future and how, from an interdisciplinary point of view, they have it all there, whether it's the innovation hub, the maker space. NJIT is already creating that collaboration between the disciplines, and you have civil engineers speaking to programmers, speaking to electrical engineers, and together they're creating advancements that we wouldn't have been able to do without those three minds coming together and solving a problem as one rather than solving it in isolation.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
This is a Bloomberg Money Minute. Wall Street may take a hit at the start of trading as investors fret about slowing economic growth and fears of higher inflation. The post-pandemic recovery has run into a brick wall as supply chain shortages continue around the world. Plus, Wall Street is bracing for the Federal Reserve to begin backing away from its easy money policies as soon as next month. The Fed, meanwhile, is getting ready to launch a review of the potential benefits and risks of issuing digital currency in the U.S. Central banks around the world are looking at cryptocurrency. According to the Wall Street Journal, Fed officials are divided about going digital. Unlike private money, such as Bitcoin, a Fed version will be backed by the U.S. Central Bank, as are paper dollar bills and quarters, dimes, and nickels. Advocates say a Fed digital dollar could make it faster and cheaper to move money around the financial system. Retailers are continuing to fret about the upcoming holiday shopping season. Early in the year, the hope was that bottlenecks that clogged up the global supply chain would be mostly cleared by now, but they've actually only gotten worse. S&P futures down 12. Ann Cates, Bloomberg Radio.
The business and market news of Asia.
China is urging the U.S. to mend ties.
It's more important than ever to global business, to finance, and to your portfolio.
We're seeing mixed markets here in the Asia Pacific.
This is where you get it.
We're still struggling with these worries over the slower growth scenario.
Bloomberg Daybreak Asia, tonight at 6 Eastern.
Let's head over to Hong Kong for a market check.
On Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Markets, you can't predict them.
The Delta variant is ripping up the playbook.
Investors being in a bit of a fog at the moment.
But when you listen to us, you'll come pretty close.
Let's take a look at those small cap stocks.
We're taking a look at some of the sector winners, the sector losers.
Is this bullish or is it bearish?
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Broadcasting 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and at Bloomberg Quick Take. This is Bloomberg Radio. This is Bloomberg Surveillance.
What you're seeing in markets right now is a tightening. This is a tightening of financial conditions.
Economic data are all over the place because the pandemic has done strange things to the data.
You have to still worry about the service sector. You have to still worry about all those areas that are connected to travel and to leisure.
There's an economic wave, there's a delta wave, and we just sort of have to work our way through this.
It's been basically a rolling correction since March.
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
And good morning. I'm Karen Moscow. We're watching U.S. futures this morning. They're falling. Commodities are rallying as a global supply crunch and the threat of persistently high inflation keeps investors on the edge. And U.S. crude oil prices, we're keeping an eye on those as well as futures surge to the highest since 2014. We're watching NYMEX crude oil up 1.7% right now, up $1.30. It's at $77.14 a barrel. Brent is also jumping up 1.8%. It's at $80.71 a barrel. Again, futures are lower with S&P futures down 5 points. Dow futures down 5 as well. NASDAQ futures down 41. The DAX in Germany, little change. The CAC in Paris up about 0.2%, and the FTSE 100 up 0.25%. 10-year Treasury down 8/32. The yield 1.48%. The yield on the 2-year 0.27%. COMEX gold down 0.25% or $4.10 at $17.54.30 an ounce. The euro 1.1631 against the dollar. British pound 1.3605, and the yen is at 111.09. We want to get a look now at the early movers, and we say good morning to Dave Wilson. Dave, good morning.
Good morning, Karen. Yeah, you've got Tesla up about 3% in early trading. The electric car maker delivered 241,300 vehicles in the third quarter. The total beat analyst average estimate in the Bloomberg survey by about 8%, and also exceeded a forecast that Tesla sent to investors. Looking at some breaking news here, Veoneer being bought by Qualcomm and SSW, $37 a share in cash. Veoneer, we're talking about a maker of auto safety products like radar systems and some of the technology behind self-driving cars. So that will be a stock to watch for sure. Swedish company traded here in the U.S. So far up 4.5%. In response to this deal. Merck also up about 4%. The drug maker's higher for a second day after study data showed an experimental COVID-19 pill cut the risk of hospitalization and death in half. So you look at the makers of COVID vaccines, they're falling for a second day. BioNTech down 6%. German company traded here in the U.S. Moderna down 5%. Novavax down 7%.
Why is Moderna down? I mean,
well, because you're talking across the group.
Merck
if you can take a pill and you don't necessarily have to get vaccinated, well, at least that may be some of the thinking involved. Theory. General Motors up 3%. People familiar with the matter said the automaker's Cruise unit will outline a path this week for a self-driving taxi business to achieve $50 billion in annual revenue. Now, the New York Times reported that activist investor Engine Number One has built a stake in GM. Facebook down 1%. Former product manager Frances Haugen gave her first public interview after turning over internal documents to U.S. lawmakers in the Wall Street Journal. She told the CBS show 60 Minutes the social media company favored its own interests over the well-being of its users. You got 3M down 1.5%. The industrial company was told to pay $8.2 million to a U.S. Army veteran who sued over hearing loss and tinnitus while using 3M combat earplugs. Stock was also cut to neutral from the equivalent of buy at J.P. Morgan. Teva Pharmaceutical down 1%. Mold from water leaks prompted the generic drug maker to recall more than 2.5 million vials produced at a plant in California. The mold was found by U.S. inspectors, and Bloomberg obtained inspection documents through the Freedom of Information Act. Teva says it's addressing the issue. And I'll give you the mover of the day.
Please.
Amplify Energy down 59%. This is the company that owns Beta Offshore, and in turn, they have an oil pipeline that leaked off the coast of Southern California. The spill led to the closing of beaches in northern Orange County.
Yeah, Huntington Beach. You ever seen that?
I saw the images. It's actually pretty serious.
It was very serious.
Yeah.
All right, carry on.
Yeah, we'll have more on that during the week. I'm sure the Huntington mayor was not pleased, as you would expect. Bloomberg Surveillance, brought to you by Cohn-Resnick Advisory Assurance Tax. Infrastructure legislation can be a game changer. Now is the time to develop strategies for what's ahead. Visit cohnresnick.com/infrastructure. And we thank Cohn-Resnick always for their support. This is an odd story, and it was so odd we dragged out Margaret Collins that we said, get her on. Instead of our U.S. economy coverage. And this is a story underneath the radar, folks. And this is a new tact, a new tone by the administration to speak to China. Peggy Collins runs a shop on economics for Bloomberg. Peggy, we didn't talk to the Chinese. It's a change in the U.S. tone. How will that be received in Beijing?
That's right, Tom. So this is essentially the U.S. trade chief, Catherine Tide. She's Biden's basically trade chief, and she's coming out today in this speech that's scheduled for 10 a.m. in Washington, where she's going to outline the Biden administration's approach and steps to China, specifically in relation to the trade deal, which was struck under the Trump administration. So this is definitely the first time we're seeing a strong tonal shift, as you said, towards not only enforcement, but having a strategy towards where they want to take this trade deal. Because we only got through phase one under Trump, and China has not actually followed through with all of its commitments there.
Well, for Jenny Leonard and the rest following us, including, I should say, Michael McKee on radio and television, is the Biden approach Trump 2? Is it Trump the sequel? Is it Trump light? What's the linkage here to the previous administration?
Well, I think what's interesting about Ty's approach today is that it's showing that two things. The Biden administration is very, very clear that with China, it wants to work with its allies more than the Trump administration did in regards to China. But Ty is also saying today that they are also going to continue some type of a bilateral approach in terms of the U.S. and China when it comes to trade. Now, in fairness, the pandemic broke out shortly after the trade deal was struck. And so when you talk about a lot of these purchase agreements and commitments not being made yet, there is that factor involved. But it's clear that the U.S. is saying to China, we are expecting you to follow through on some of these commitments, and we are going to try to keep the American workers and businesses in mind when it comes to the tariffs that are already out there. And it does seem like they are thinking about a phase two, which is where some of the even more thorny issues are.
Peggy, how much more vulnerable is the United States because of some of the supply chain constraints that have led to record long waiting times for certain manufacturers and particularly retail stores?
Lisa, this is a great question. I mean, I think even Fed Chair Powell has acknowledged that the supply chain constraints that we've seen globally have just lasted so much longer than people expected. I mean, we've had stories out from the Eco team already about holiday shopping and how people are bracing and retailers are bracing for it to be another tough holiday season. So I do think the U.S. and lots of countries, I mean, we've seen fuel shortages in Britain of late, and sort of a power crunch in China. So I think tons of countries are feeling
I think maybe she's on the pendulum of gloom at a greater extent than Abramowitz.
Well, I mean, look, they've got all of these issues. They are real issues. She is being realistic. My issue is how much can the United States turn up the screws, tighten the screws on China when they need the goods? In other words,
there you go.
No, I mean, in all seriousness, I mean, how much leverage do you have?
Michael Barr, could you see Abramowitz as a trade negotiator?
She'd win every time.
Oh, you think so?
Oh, yeah.
What do you think, Peggy?
Peggy,
seriously, what does the administration do?
I could definitely see it. I could definitely see Lisa being incredibly effective and efficient. She always is.
Yeah.
I will just say, I'm
Peggy,
the trade representative.
To wrap this up quickly, Peggy, what does the administration do when China goes, no?
Well, I think that's something that is still unclear in terms of how the administration has said that they are leaving all tools on the table. So that indicates that tariffs are still part of the toolbox and they're willing to use them. But they also said they're not aiming to escalate the tensions with China. So they're trying to basically thread the needle and get both of those things through. But I do think, to your point, it's going to be difficult.
Peggy Collins, thank you so much. Jenny Leonard writing on the United States and Beijing. With your news in New York City, here's Michael Barr.
Tom, Lisa, thank you very much. Crews continue to work to limit environmental damage from a large oil spill in California. An underwater Southern California pipeline started leaking oil over the weekend. The pipeline is owned by Amplify Energy. Officials said that at least 130,000 gallons of oil spilled into the waters off Orange County. Huntington Beach Mayor Kim Carr.
Our wetlands are being degraded, and portions of our coastline are now covered in oil.
Mayor Carr says the city's beaches could remain closed for weeks or even months. Police say a certified nursing assistant shot and killed a co-worker inside Jefferson University Hospital in Philadelphia overnight before taking off in scrubs in a U-Haul truck. He also shot 2 officers before he was hit by return fire from police. Authorities say the 55-year-old suspect is hospitalized in critical condition.
The officers shot are both expected to survive. 2 U.S.-based scientists have been awarded the Nobel Prize in Physiology or Medicine for their discovery of the receptors that allow humans to feel temperature and touch. David Julius and Artem Papapotian were announced today as the winners. The Buccaneers, they beat the Patriots at Gillette Stadium Sunday, 1917. It was homecoming week for Tampa Bay quarterback Tom Brady, who racked up a handful of Super Bowl rings with New England. After the game, he was asked if this would be the last game in Foxborough.
It's been a great stadium, for me for a long time. So I don't know what the future holds. Obviously there could be an opportunity to come back here. So we'll see. I feel like I'll always be a part of this community, and I'll be up here quite a bit when it's all said and done.
Tom, you handsome lug. He also passed Drew Brees for the NFL all-time passing record. Live from the Bloomberg Interactive Broker Studios, this is Global News, 24 hours a day. You know. Tom?
Michael Barr, cut to the chase. Anne Marie Horton down in Washington is paying $1,235 to sit behind the Yankees dugout at Fenway tomorrow. What's she going to see? What kind of game? Are we going to see 0-0 drama like we saw with
You're going to see a long game. You got one game, and you got one job to do, both teams.
So if Garrett Cole stumbles, boom, somebody comes in right away.
Well, he's not going to pitch because he already pitched earlier.
She's going to see a smaller bank account.
Yeah.
We're hearing he's pitching tomorrow.
Well, I'm not sure who's pitching tomorrow because Garrett Cole, he pitched just, a couple of days ago. I'm not sure he's through the cycle.
Okay. Well, I guess he's pitching.
He is pitching tomorrow.
It's going to be exciting. I mean, this is what it's about.
This is one game. One game. This is all. This is what it's all.
Can I start my World Series lecture now?
Go ahead. I'm listening.
Why do the games start at 8:20 and go deep into 11 midnight? 1 a.m.
Dude, it's about money. You're
the Bloomberg Business of Sports. Lisa wants to stay up and see each and every World Series playoff game, and she and I are like surveillance bedtime.
I see that look. I wish you could see the look of
The last time she watched was when the Mets were. Mets were.
Yeah, 1836. But I will say, what's surveillance bedtime for you?
Oh, it's like, I don't even get to warm up. Yeah. They're singing the national anthem. I'm going to sleep. But Michael Barr, what's the money to have the best part of a baseball game at midnight?
Well, you're thinking of an East Coast. Think West Coast now.
I don't buy it. Michael Barr, there'll be much to talk about here. Michael Barr, thank you so much. Lisa Bramlett and Tom King. Lisa in for Paul Sweeney.
Yeah.
Future's a little flat, -8. Stay with us. This is Bloomberg.
The world's financial decision makers connect on the Bloomberg terminal, sharing ideas, negotiating trades, and forming an influential network that helps power global markets. Isn't it time you join them? Bloomberg.com/professional.
Burden LLP Accountants and Advisors presents Tax Chat with Lisa Goldman, partner and leader of Burden's International Tax and Advisory Practice.
If you're a high net worth individual with international investments or a business owner with operations overseas, it is essential to have a tax advisor who knows how to protect your assets on a global scale. Owning and investing in foreign corporations comes with certain tax responsibilities. Burden Accountants and Advisors works with clients to ensure that they understand the intricacies of the global market, maximize the tax opportunities available, and reduce the challenges presented by international tax laws.
If you're a high net worth individual or a business owner, let Burden help protect you, your family, and your business. For more tax chat from Burden Accountants and Advisors, visit burdenllp.com. That's BERDONLLP.com. Burden Accountants and Advisors. We listen, we solve, we do.
The Alzheimer's Association and the Ad Council present the story of Tom and Levi.
Tom is the smartest man I know. He's been a professor at 2 major universities, been a teacher for over 40 years. One day, he told me that he was having problems in his classes. I think one of the students had asked the question and he didn't remember the answer. And I also noticed that he was letting his class out earlier than they were supposed to let out. And he was telling them that he was doing it as a favor to them, but I think in reality, he just wanted to get out of there. I was really starting to worry because I saw something was wrong.
Levi and I talked about how it would change our lives, but he was there beside me, and my love for him was just immense.
When something feels different, it could be Alzheimer's. Now is the time to talk. Visit alz.org/ourstories to learn more. A message from the Alzheimer's Association and the Ad Council.
Influential conversations from Bloomberg Television. Here's Danny Berger.
Joining us now is Tatiana Garriul Castro, co-head of public markets at Muzinich & Co. We have a host of central bankers speaking. It's continually this mantra of don't be worried about inflation. It's going to be fleeting once the supply chain issues sort themselves out. But you see stickier inflation. What do Powell and Lagarde and team, what are they getting wrong?
Clearly, Delta and the pandemic triggered something more structural. One is that some of the labor doesn't return. So that is clearly something that is an issue. And we have seen many of the lower paid and less educated jobs that were carried out by older people. They are not really replaced by younger people. And so as the older workforce is going into retirement and not coming back to the labor market. And then the other is clearly the transition. We are in the transition period with regards to trying to reduce carbon emission. And on the back of that, we are moving to different sources of energy. Clearly that has implications. And then the third is, in terms of inflation, is that the effect of climate change that we see already. And this you can definitely see in terms of food prices. So here we are. There is not many factors that are here to stay and that will keep inflation high.
Hear more conversations like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app. Or check your local cable listings.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
And I'm Karen Moscow. In U.S. stock index futures edging lower, commodities are rallying as global supply crunch and the threat of persistently high inflation keep investors on the edge. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures down 8 points, Dow futures down 18, NASDAQ futures down 54. The DAX in Germany's little changed. 10-year Treasury down 8/30 seconds, yield 1.49%. The yield on the 2-year 0.27%. NYMEX crude oil is up 1.6%, up $1.22 at $77.09 a barrel. COMEX gold down 0.4% or $6.90 at $17.5160 an ounce. The euro 1.1625 against the dollar. British pound 1.3599, and the yen's at 111.12. And that's a Bloomberg Business Flash. Tom and Lisa.
Thanks so much, Karen. Greatly appreciate that this morning. On the pandemic, well, there's good news. There's a set of bad newses, but all in all, what an interesting weekend of a nation maybe in recovery. On COVID-19, Joshua Sharfstein with Johns Hopkins University.
I would say that it is likely that the worst of the Delta wave in the United States is behind us, although in certain places it's still horrifically bad, and as they're making decisions on who lives and who dies, for example, in Alaska. But the dynamics of the wave are receding in a lot of places, which is great. But we could still see a lot more people sick and dying over the next few months if they're not vaccinated particularly. So we still have some work to do. I do think, though, that unless the virus mutates again, which could happen, we could well be on a pretty steady downward trajectory.
Help us with the summary of your reading. As a voracious reading of your profession, have the political efforts to force vaccination worked? Do you see an observable trend that politics saying get vaccinated works?
Well, I think vaccine mandates get a lot of people vaccinated. And you see that whether they're airline pilots, hospital workers, now teachers in New York. And that's because there are a lot of people who, unless they really need to, they're not going to go out and do it. It doesn't mean they're dug in against it. And I see them when I go out and volunteer as a vaccinator. People show up and I go like, well, why are you here today? And they go, my job required it. I figured I might as well do it. It's not a small number of people. And those are all the people who are going out and getting vaccinated. That's good. Now, of course, there's some people who, are dug in, might even quit their jobs. And that's, terrible all around. Like, we want them to get vaccinated. We want them to have a job. And you've got to worry about certain industries where people, are already, you have a marginal employee base. I've talked to some experts of the nursing home industry who are very worried what could happen when those mandates go into effect, because people could just go get a job somewhere in a different industry. So I think that, in general, it's been pretty helpful, but I don't know exactly how it's going to play out everywhere.
Dr. Sharfstein, let's say someone got a booster shot, let the appropriate time pass. Do they still have to wear a mask?
For right now, it kind of depends on where you are. I think that if there are a lot of cases, remember that even under the best of circumstances, you can still get COVID. It's possible. And so you want to, reduce your chances. So, I think it'd be prudent to wear a mask while there's still a fair amount of community COVID. There's still over 100,000 cases in the United States every day. And that just, particularly when you're pressed up in a supermarket line or something, put on a mask. That would be my suggestion.
Or if you're, in a movie theater watching No Time to Die, which I think is what John Farrow was trying to get to earlier.
Thanks, Lisa.
In the morning. So
it was a solid attempt, I thought.
I thought it was really admirable.
It fell flat.
Well, I think that I learned, I looked it up. It's October 8th that the debut is in the United States. Dr. Sharfstein, though, as we do get back to normal, how concerning is this? What is the fear if people are vaccinated and they contract COVID? If they get the sniffles? Honestly, at this point, when do we stop being worried and start treating it just like a common cold if people aren't going to end up getting hospitalized and the risk of death is fairly low?
Well, to me, it's the difference between being extremely worried that I could get very sick, and so I'm wearing a mask and kind of anxious when I'm going out, versus having been vaccinated, I'm going to put on a mask to reduce the chance that I get sick. There's a lower chance, but some chance of lingering symptoms from COVID. I just rather see it go down in our community. I think we're still having trouble switching from what exactly is going to happen to me to how do I keep my community safe. But if we put that lens on it, then the really important thing is how much is out there. And as there's less out there, then there's less reason for people to worry and wear masks.
Joshua Sharfstein with Johns Hopkins University with the first discussion this week on a pandemic evolving. And what I see, Lisa, it was sort of a healing week, a healing weekend. Some of the trends move in the right direction, but he pushed back against that. I won't mince words. He was saying, look at Alaska.
Yeah, that basically that the threshold between a fourth wave and not is still thin, and people have to still behave in a certain way. Do you buy what people were saying, that some of the momentum in stocks was because of the improvement in numbers?
Yes, I think it's tertiary, but yes, I do think it is part of the behavioral construct of the marginal long for longer crew.
But I wonder how much people still look at the virus counts when they decide what to buy.
This is a really, really important question. And what it comes down to within the factors or within linear regression, the items that you look at, those weightings are always changing. Is the weighting of the pandemic now anything like it was in May of 2020? No. But it's still there.
But I ask it because we also heard from the Airline Association this morning that the losses are expected to be something like $200 billion, even going into next year, even with the past of the pandemic. You just wonder.
Well, the tweet this weekend, and I know JetBlue was involved, and I can't remember the other three airlines. Are they going to follow the stridency of United Airlines? And that for the nation, it's not just rich people flying around or people going to see family, whatever. It's a huge forward signal if the airline industry follows United, which is basically saying, if you're not vaccinated, you don't get to participate.
Right.
And, it doesn't matter what my opinion is, yours or whatever. If it matters what Pharaoh's opinion is. But other than that, it doesn't matter.
That's fair.
But John brought up, and John's been, within the industry out front on this, getting international back to norms is just as challenging.
Without a mandate, though, what if people just don't feel safe enough to fly? Right. Unless you have this kind of, mandate or some kind of mass adoption, do people return to the kind of travel that they once did?
Look, Sotomayor said with the Supreme Court, I believe it was buried late Friday, as all Supreme Court decisions are. I can't remember right now. But the idea of courts weighing in support or against some of these strident moves, and we'll have to see how that plays out. What we have is playing out is, okay, it's a delay till Friday. And the jobs report will begin our labor coverage on Wednesday. go beneath the headline data on Friday, as we always do. A real mystery out there. The dispersion, as David Wilson said, is a key idea. Markets shared futures at -9, Dow futures at -30. The VIX up a stick 22.25. This is Bloomberg.
For the Jewish Communal Fund, past president Noel Spiegel.
People often ask me why it's important to use JCF for their charitable giving. I tell them that JCF has a profound impact on our community. Thanks to the revenue generated from our funds, JCF makes an annual $2 million grant to UJA Federation of New York and makes grants from our endowment, the Special Gifts Fund. This year, we proudly granted more than $800,000 to support a kosher food pantry at Mid-Island YJCC, Jewish daycare at the Ed Alliance, a renovation at Camp Oakhurst, and an intergenerational Holocaust program at Ramaz. I'd like you to hear about our impact from a past Special Gifts Fund recipient.
Plaza Jewish Community Chapel is most grateful to JCF for supplying seed money to start the organization. Almost 10,000 families have relied on Plaza to provide an affordable yet dignified Jewish funeral.
Let JCF maximize your impact. Visit jcfny.org or call 212-752-8277.
What's the true value of your custodial relationship? Ben Harrison of BNY Mellon's Pershing explains.
As sophisticated investors demand more from their advisors, advisory firms, in turn, need to rely on their custodian to help them grow their complex businesses. At BNY Mellon's Pershing, supporting the rapid growth of RIAs is our #1 priority. We understand what it means to deliver true value to our clients who are looking for a custodian that is aligned with their best interest and delivers high-value solutions, all in an open architecture environment with flexibility, choice, and transparency. Learn why so many of the largest advisory firms turn to us for the financial strength, resiliency, and high-touch service that BNY Mellon Pershing provides. When you work with Pershing, we put your business first. Can your custodian say that?
Learn more at Pershing.com or call 800-445-4467. Pershing Advisor Solutions, LLC. Member FINRA SIPC.
This is a Bloomberg Money Minute. The giant generic drug maker Teva Pharmaceutical is recalling more than 2.5 million vials filled with cancer medications. There are concerns the drugs, which were manufactured at a California facility, may not be sterile. Federal inspectors discovered water leaks at the plant, and there are concerns about possible mold contamination. Worries over the impact of supply chain issues on retailers' holiday inventories are intensifying. That's because there are about 80 days to go before Christmas, and door-to-door transit times for ocean freight from China to the United States have stretched to 73 days. More people are going to movie theaters. The sequel Venom: Let There Be Carnage from Marvel and Sony Pictures had the biggest opening weekend for any film since the start of the pandemic. Ticket sales topped $90 million. Stock market futures are slightly lower as Wall Street prepares for the new week. Jeff Bellinger, Bloomberg Radio.
If knowledge is power, the Bloomberg Terminal is your power up, connecting you to real-time financial data, market-moving news, powerful analytics, and an influential network of financial decision makers around the world. Share ideas, negotiate trades, and gain the insight you need to make more informed decisions. See how the Terminal can take your workflow to the next level at Bloomberg.com/professional.
It's not just work. It's an unfolding, ever-changing universe of characters.
Can we get out of the pandemic?
Bloomberg Business Week.
It's the app that made trading hard to resist.
Weekday afternoons at 2 Eastern on Bloomberg Radio. Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
Good morning. I'm Karen Moscow, along with Tom Keene and Lisa Abramowitz. In the opening bell, brought to you by SEI. Imagine your asset management firm's operational infrastructure as a competitive advantage. Let SEI show you how at SEIC.com/IMS. And so stocks are lower at the open. The S&P 500 is down 0.25% on 11 points at 43.45. The Dow Jones Industrial Average down 0.1% or 49 points at 34,278. And the Nasdaq's down 0.5% or 78 points at 14,487. 10-year Treasury down 7/30 seconds, yield 1.48%. The yield on the 2-year 0.27%. NYMEX crude oil is up 1.6%, up $1.20 at $77.07 a barrel. COMEX gold down 0.4% or $7.30 at $17.51.40 an ounce. The euro 1.1630 against the dollar. The yen's at 111.13. Tom and Lisa.
And right now, I'm going to get out a 4-day chart on Brent crude as Lisa gives us the best data check on the street. And I'm just not going to mince words. Brent crude was some form of moonshot on a 10-day intraday chart. You can do that off the Bloomberg terminal right out to new highs on the cusp of $81 a barrel, $80.86. And it's not that it's up, it's the way that it's up.
Yeah, it's been up dramatically, but basically the OPEC Plus panel today did not agree to increase production.
Yeah.
And that sent prices that much higher.
Yeah.
This question, what's going to be the circuit breaker?
Yeah, and Halima Croft, I know over at RBC, made it very clear she's looking for supply to come on from what she called the central banker of oil. That would be the Saudis, and that did not happen, I guess, today. Right now, an exceptionally important moment for those of you scared. There's just no other way to put it. Christopher Grisanti is a rational mind within the equities space at MAI Capital, and we're thrilled he could join us this morning. Chris, what have you done in the last week to your portfolio to assuage the fears?
Well, Tom, I think you're right to point out that we're in a market at a crossroads more than any time, really since the market started rebounding in the middle of last year. So I think there's a lot of cross currents, but I also think if I had to vote, I would bet that it gets resolved upwards. So we've been sticking with equities. In the last week, we've been buying a lot of Boeing, which kind of fits what I think will happen over the next 6 months. I think the COVID slowdown is not just ending. I think it's over in the sense of caseloads are coming down in the worst states in the United States. I think earnings estimates have hit bottom for the third quarter. So I'm relatively constructive on equities looking ahead.
How do you explain the Nikes and the Bed Bath and Beyonds of the world? Basically, people who come out with projections that miss expectations dramatically because of the supply chain constraints, even as you see COVID start to recede.
Yeah, no, Lisa, I think that's a problem. And so I think, that's why you have a portfolio and not just one or two companies. And you got to be on top of those issues.
Well,
but
is it just one or two companies, or is this a broader story?
Clearly, that's an understatement. But what I'm marginally happy about, even with that, is that this is not a demand issue, it's a supply issue. And so supply issues get resolved over time. And so I'd be much more worried if Nike missed earnings simply because people weren't buying sneakers. They didn't want them. So it's bad news for sure, and there are dislocations in a strongly growing economy, but that's a relatively benign symptom of an economy that's growing and is basically relatively healthy with some shortages here and there.
We just had the worst week for U.S. equities going back to February. We have nervousness. Is now a time to be buying, or is now a time to be sitting back and observing and figuring out the shift and where it goes?
No, I would say the former. I would be a buyer of equities here. I think the nervousness is backward-looking. I think if you look ahead 6-9 months, I think the Delta variant will be mostly under control. I think we'll have booster shots of the right kind and the right quantity. Higher rates, by the way, they're not a bug. They're a feature of a growing economy. We could, we've done great with 2.5-3% rates. So if they go up that high, I'm okay with that. So, I would be a buyer here because the fourth quarter looks much stronger than the third, and going into 22 looks good too.
Can I note, not in this episode of Ted Lasso this week, but Lisa, in the episode last week,
please,
they were talking about the Nike Air Yeezy Red Octobers. They wanted to wear them to a funeral instead of dress shoes. They're popping this morning on Flight Club at $19,998. I mean, Chris Grisanti, when you see that, has Nike lost the charm? And the answer is no.
Absolutely not, Tom. You're absolutely right. And General Motors will have a crummy quarter because of chip shortages. But the good news is twofold. One, the consumers have the money to buy the cars. And two, GM will fix that, and they have a good offering of cars coming up. So, again, don't look backwards. Look forward. Gird your loins and buy some stock.
Well, Tom, is this a matter of the shoe company, or is this a matter of Yeezy, the brand? Didn't you see that Gap had a sweatshirt that was a Yeezy sweatshirt, and it sold out in like 5 minutes?
Yeah, well, we got that.
You did not.
It's plain. Yeah, of course. Afterthought needed it. She's going to the Hamptons this weekend. But, seriously, I look at Nike, peak free cash flow, $6 gazillion. They're already way past that on an estimate basis. Do you see, Chris Casanti, that too many people aren't on a relative basis looking at the earnings numbers and ratios versus not the pandemic, but before the pandemic, where we've really advanced beyond, haven't we?
Well, we sure have, Tom. And what I like to say is, look, we've paid an awful lot of money for this recovery, $5 trillion in stimulus and going onwards. And so we ought to enjoy it. And there'll be issues that come up. Lisa mentioned shortages. I'm afraid of wage inflation next year. But right now we're in the middle of the recovery. We're not at the end of it. And I would continue to ride the boat.
Chris, you're afraid of wage inflation. And that's spoken like someone who's buying the equities, not perhaps that's going to be on the other side. I'm wondering how you're playing that, where you're seeing that, what that does in terms of which equities you're avoiding because they'll be more susceptible to those wage pressures.
Sure. So inflation is really complicated. It's not inflation bad, slow growth good. It's much more, where does inflation hit? Remember, earnings are reported in nominal dollars. So all things being equal, corporate earnings will be up with 4% inflation. They'll be up 4%. So we need to focus on those companies like Nike, be a good example, that have pricing power because they have unique products or they can deliver you things quickly like Amazon. So I'm not terribly afraid, even though, for example, Amazon's a big employer, that the wage pressures that they will definitely feel, I think they'll be able to pass those on. So anyway, it's research intensively, and we're doing that.
Chris, very importantly, Anurag Ron and his team, John Butler and all on Apple at Bloomberg Intelligence, have pounded the table late last week that everybody's getting the iPhone count wrong. They're 6.5% above consensus, and they say they could well be wrong on that. You are an Apple student. What do you make of the new zeitgeist for Apple in terms of a 3 or 5 year hold?
In terms of that long a hold, Tom, I'm happy with it. Short term, I'm not super excited because the valuation plus the only incremental change with the new phone. I do think the phone will be a better seller than folks expect, and that ought to be good for the stock marginally. Because it's not so much that there's not that many features, it's more that consumers are flush with cash. And if there's no shortage, they will buy the phone. So I would be, but having said that, Apple at 26 times next year, it's not a cheap stock. Right. And I think there's better ways to make money right now.
Chris Casanti, thank you so much with MAI as well. Lisa, I looked at the iPhone thing. I've got Afterthought at home and VetBill, both with spreadsheets of T-Mobile, Verizon, and AT&T. Going, now's the time to pull the string.
I mean, VetBill has an Apple dog bone.
No, he has an iPhone 9.
An iDog bone.
No, he has a dog bone, but he's got an iPhone 9, and he needs to ramp up.
So occasionally you get a phone call and it just...
No, well, I get that all the time. It's not VetBill. But
moving on. Michael Barr.
No, but very, very. Did you see how she does that? It's different than with Sweeney Barr. It's different than with Sweeney.
You think?
That was so wrong. I'm trying to pull on this newscast.
Saving us from the pendulum
dog bark
of weekend of Lisa Abramowitz. With our news in New York City, here's Michael Barr.
Oh, my Tom, Lisa, thank you very much. Crews are working to contain and clear up a major oil spill impacting the Southern California coastline. The oil has reached the coastal wetlands with reports of dead birds, fish, and other wildlife. The sight of Huntington Beach's shoreline covered in tar is heartbreaking to Supervisor Katrina Foley. She says the preserves that they spent years trying to rebuild and protect are ruined.
I think it is irreversible. I mean, what's happened in the wetlands and through 3 of our marshes in Huntington Beach and in the Talbot Marsh. It's irreversible because it took us decades to clean up those areas.
Supervisor Katrina Foley says now they are trying to minimize the damage by building a sand wall to keep the waves from pushing the thousands of gallons from reaching even further into the wetlands. Ocean conservation nonprofit Oceana, in a statement, called the spill just the latest tragedy of the oil industry. Oceana Chief Policy Officer Jackie Sevitz.
Oil isn't just one toxic chemical. Oil is actually a toxic chemical soup. And so there's a lot of different chemicals that are in the oil. Some of them will actually dissolve in water, which is bad news for the fish.
Oceana Chief Policy Officer Jackie Savitz. New York City public school teachers and staff have to be vaccinated or have to have at least their first shot starting today, or they could be suspended without pay. The Department of Education reported since September 24th, more than 18,000 shots have been given to staff members. The Supreme Court begins a new term today. Guns, religion, abortion, all on the agenda. The justices will meet in person for arguments today, although Justice Brett Kavanaugh will participate via telephone after he tested positive for COVID-19 late last week. Live from the Bloomberg Interactive Broker Studios, this is Global News, 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts, more than 120 countries. I'm Michael Barr. This is Bloomberg. Tom.
Michael Barr, thanks so much. Equal opportunity. Red Sox, Yankees. Jets win, Giants win. When was the last time we said Jets win, Giants win?
Let's see. I think Joe Namath was playing.
Yeah, it's going to Y.A. Tittle or something like that. I mean, finally, why are the New York franchises so underperforming?
Bad.
Is there like a why?
Well, I'll say this: the Giants have a shot. I like the way Daniel Jones is playing at quarterback for the Giants.
This gentleman's from Duke.
Yeah, and he looked good. Now the Jets, they still have some more work to do, but
Jets.
hey, they came through.
Am I right? Is a complete hack at this that when I watch the Jets, every play is an adventure?
Yeah.
Is that like
it's sort of like the show?
It's not like
she's worse on TV.
I mean, the Jets they have a lot to do. I mean, you have a rookie quarterback. He's trying to get his shoes filled and all this, whatever. But it's on all aspects, there's a problem.
Right.
But they won. I mean, the Lions didn't win. We're 0-4. So, you know.
Who's the team you're watching right now? 4 games in, it's got to be a team that's surprised constructively. Who's that?
I still say I love Kansas City. It's not much of a surprise because you have Patrick Mahomes.
They're like really good, right?
They're very good. I mean, I was surprised they lost the previous week, but they killed it this week.
Okay. Well, Michael Barr with a football update. And, of course, Harvard, we do Harvard for Boston. Good morning up in Boston. We had Harvard football this weekend as well.
Yep,
we'll continue forward. Lisa, you like this? The sports turn with Michael Barr? Business of sports?
Just blew my mind.
It just blew your mind.
Yeah. I'm still thinking about why New York is so bad.
What time are the wild card games? I hope they're not 8:20. Tell me they're not 8:20.
Non-stop.
I may have to call in sick.
This is...
If knowledge is power, the Bloomberg Terminal is your power up, connecting you to the real-time financial news, data, and analytics that can take your workflow to the next level. Power up at Bloomberg.com/professional.
The Bloomberg Pursuits look at luxury. Ugly, unexciting, but very capable. So goes our Auto Critics review for the new BMW iX electric SUV. For BMW buffs, the iX offers seating for 5 and 300-plus miles of driving range, but not much in the way of thrills. From some angles, yikes, the $83,000 auto could even be mistaken for a minivan. Still, the BMW iX electric SUV does boast a well-built, thoughtfully appointed cabin and quick handling for its spacious size that should keep EV-curious brand loyalists in the driver's seat. Meanwhile, how about a flying Accord? Honda is looking to the skies for its future, saying it's pressing ahead with plans for gas-electric air taxis, reusable rockets, and a renewable energy system for the moon. It also will continue refining its humanoid robot, the Asimo, for use both at home and in space. I'm Andrew O'Day, Bloomberg Radio.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, President of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at seic.com/seize change.
Business, finance, and the latest news affecting world markets. Powered by more than 2,700 journalists and analysts in over 120 countries. This is Bloomberg Radio. Now, a global news update.
Cleanup efforts are underway on a massive oil spill off the coast of California. An underwater pipeline leaked about 126,000 gallons of heavy crude oil into the Pacific Ocean, shutting down several beaches in Orange County. Some of those beaches might not reopen for months. The holidays will be coming up soon, and the pandemic is still with us. Miguel Almaguer has more on what that means.
The CDC advising the safest way to celebrate is virtually, signaling people may need to be apart for the holidays once again.
If virtual or outdoor gatherings are not an option, the CDC recommends using a window fan to keep indoor air as fresh as possible. This all comes as the U.S. death toll from COVID-19 now stands at more than 700,000. Facebook says any claim that it played a role in January's attack on the Capitol is ludicrous. The response is to a story on 60 Minutes last night. That's where a whistleblower alleged the social media giant turned off safety measures after the election. I'm Brad Siegel.
When unprecedented events are unfolding, it's important to let history teach us.
Do you think it's a different world for the Fed?
Bloomberg Balance of Power with David Weston. Weekdays at noon Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and U.S. stocks are edging lower. Commodities are rallying as a global supply crunch and the threat of persistently high inflation keeps investors on edge. We check the markets every 15 minutes throughout the trading day on Bloomberg. Right now, the S&P 500 is down 0.4% or 18 points at 4338. The Dow Jones Industrial Average little changed at 34,328. NASDAQ down 1.3% on 191 points at 14,375. 10-year Treasury down 11/30 seconds, yield 1.49%. The yield on the 2-year 0.27%. Now, oil has hit a 7-year high as OPEC Plus agrees to a small output hike. NYMEX crude is up 2.7%, up $1.99 at $77.88 a barrel. COMEX gold is down 0.2% or $5.40 at $17.53 an ounce. The euro 1.1627 against the dollar. The yen 111.21. Watching Moderna down almost 8% as traders dump vaccine stocks following Merck's announcement about an effective COVID-19 drug. Merck is up 3.6%. And that's a Bloomberg Business Flash. Tom and Lisa.
Thanks so much, Karen. Greatly appreciate it. Lisa Bramwett's in for Paul Sweeney. I'm Tom Keene, and we thrilled you with us here on a Monday. We are always honored to speak to Arthur Levitt, former chairman of the Securities Exchange Commission, Bloomberg board member on things having to do with finance. The reason we have him on this morning is because, Arthur, I've done the surveillance math, and I believe you're 47 days older than William Shatner. Mr. Bezos announced this morning that they will launch William Shatner into space on the next Blue Origin capsule. Arthur, would you like to go into space?
No. I'm perfectly content staying right here on Earth and talking to you, Tom.
What if they let you take the dog? I mean,
of course.
That would be different.
Goes with me wherever.
I mean, that would be something as well. It's going to be something. William Shatner, age 90? will be into space, which is really something to behold. Arthur Levitt, let us talk about Janet Yellen, Secretary Yellen, and the debt limit. I believe you were 6 years old when we first started talking about the debt limit.
I know. It's now set in nominal dollars of gross debt, no matter how high our national income rises. So the limit on debt has no relation to our ability to pay it. And if you take out a loan for $1,000 and earn $50,000 annually, repaying it should be manageable. But if you take out a loan for $1,000 and earn $1,500, that will bring on a crisis. So Mike Bloomberg suggested in an op-ed that Congress find a middle ground and set the limit as a proportion of national income. That would make the debt ceiling less arbitrary and probably force a more meaningful conversation around fiscal restraint when the ceiling approaches.
In the meantime, though, there's a question of what the potential liability of having this debt ceiling is if basically people ignore it, not only in Washington, D.C., but frankly in markets that view it as political theater that will get resolved just as the deadline hits.
I think that's probably so, and I think that will continue.
Okay, so then the question is, what's the consequence, right, in real terms, other than just allowing the political theater to continue with its, basically superficial or should I say, self-imposed drama as a deadline that perhaps wouldn't have to otherwise be?
I don't see anything in this proposal that would sidestep the periodic drama.
No, I'm not saying that. I'm just asking what's the practical implication of having the debt ceiling at a time when the U.S. was downgraded even for the potential of having this kind of tit for tat that ends up with this kind of deadline on a frequent basis. I mean, is there some sort of long-term damage to the United States preeminence?
I think there is damage. I don't know what the extent would be because it depends on so many other variables that will occur before then. But I think managing this becomes a great problem, and up to now it's been dealt with in political terms rather than practicalities. And I think Mike's solution is a pretty good one.
Arthur Levitt, thank you so much. Greatly appreciated. The former chairman of the Securities Exchange Commission, scheduled for launch on Blue Origin here in a number of weeks.
Can I go?
It's pretty cool.
I think it's amazing.
And let's make clear, there's differences. What's interesting aerodynamically is the difference between the Branson effort, the Bezos effort, and the Musk effort.
It's completely different, actually.
Red Ludlow, I think, has just done a great job of explaining this. We've decided, and folks, full disclosure, we've decided to cover space because it's technology. It's an ethos that goes back a zillion years, but it's still a huge debate. Why are we doing Branson? Why are we doing Bezos? Is it a billionaire's toy? Why are we doing Musk, which is orbital?
How much is scientific exploration? How much is national security strategic type of positioning, since you can get a certain vantage point?
I'm so glad you bring that up because there's a raging debate off the radar of what to do with the Trump space efforts with the new administration and the next administration, whatever it would be.
If you have exploration starting from the likes of China, not only do you have the technological advance, but also satellite advance, also, the whole idea of connectivity in a way that can't be disrupted in the same kind of way that perhaps the grid could be today, theoretically. I mean, honestly, I think it's fascinating.
Let's close on the markets here. In the bond market, I see the real yield negative 0.90%. That's, even when we had a lesser negative statistic there, it was by no means a breakout to some new territory of a better real yield.
And, we have seen all this volatility, but as Jean Ferris pointed out before, it gets us back to where we were just 3 months ago, basically. We're basically just a couple basis points from where we were, 1.5%. What's going to cause a breakout close to 2%
We
at this
don't
point?
know. This is such original territory that the smart, take an Ira Jersey, the smartest people we know they can come up with theories, but they don't have any probabilities of those outcomes because it's all original.
But at the same time, people are saying that credit risk is the way to go because you don't see a default cycle coming into play. However,
I heard that twice today.
Right, but you are seeing a softening, particularly in riskier securities, not because there's a material credit risk as much as there's this feeling that perhaps things got a little bit priced to perfection, and all of a sudden the full faith in credit starts to offer some attractive alternatives.
But on the Abramarama meter, how close are we to 06 where people were constructing transactions to make 4 basis points or 7 basis points off the bench?
To quote one phenomenal Tom Keene, this is original territory when you have a Fed backstop that's going to come in and it has a precedent of buying corporate debt. That is a game changer.
We try to frame this Monday for you. We're framing it into the jobs report on Friday. Really interesting beginning to this October. Red and green on the screen. The Dow up 55. SP and NASDAQ go the other way. The VIX 22.23. Please stay with us through the morning on Bloomberg Radio. Good morning, Giants and Jets.
What I know about courage, I learned from my adoptive mom. She said sometimes you just gotta hold on and know we'll get through this. Mom, we are so high up. Hold my hand.
No, you hold my hand.
Here we go.
Learn about adopting a teen from foster care. You can't imagine the reward. Visit adoptuskids.org to find out more.
I learned patience from my adoptive dad. All he had to say was,
"Hey, you got this. Just breathe." Hey, we're pretty good.
Yeah.
Might have to start a band.
I got it.
Learn about adopting a teen from foster care. You can't imagine the reward. Visit adoptuskids.org to find out more. This message is brought to you by Adopt US Kids, the U.S. Department of Health and Human Services, and the Ad Council.
NJIT makes the workforce of the future, and Greg Sauter, a member of NJIT's Board of Overseers and president of engineering firm WGI, says NJIT graduates have the in-demand skills that drive today's tech-powered workplace.
Our world is moving to a place of connecting the physical with the digital. In the field of engineering and infrastructure, there's not a thing that we do that's not being changed by technology. We've gone from two-dimensional renderings to immersive, augmented, and virtual reality. Solution sets used to be solved one at a time. Now we can run nearly an endless alternatives analysis and optimize the output. And how we construct that future, from autonomous equipment to 3 and 4D printing. NJIT students graduate with that critical understanding of the cyber-physical world and how we move between them, but with that all-important grounding in applied STEM principles.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
This is a Bloomberg Money Minute. Some retailers are already in panic mode over holiday inventories and deliveries. Supply chain issues appear to be worsening. COVID outbreaks have shut down some of the world's port terminals. The backlog of ships waiting to unload at the U.S. West Coast ports is growing, and there are not enough truck drivers to move all of the goods once they're unloaded. Ford's business took a hit last month. The automaker reports total U.S. sales were down more than 17.5% from September of last year. Apple announced it will start accepting orders for the Apple Watch Series 7 this Friday. The new watch will be available a week from Friday. It has been raining in Brazil. That is good news for coffee lovers. Arabica coffee futures have eased after hitting a 2-month high on Friday. Showers and warm temperatures benefit the flowering coffee plants. Stocks are starting out mixed. Only the blue chips are higher in early trading. Jeff Bellinger, Bloomberg Radio.
The market news you need.
Rates are low, earnings are pretty good.
Along with the insights you didn't know you needed.
When I'm walking my dog, when I'm taking Steve around the block. Steve is the name of your dog? Yeah, Steve.
Bloomberg Markets with Paul Sweeney and Matt Miller.
My dream scenario is that Paul sells his house, then the bubble bursts, and then I can find one.
Weekday mornings at 10 Eastern.
Never met Steve?
I have not met Steve.
He's been on TV a lot.
On Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Broadcasting 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and at Bloomberg Quick Take. This is Bloomberg Radio. This is Bloomberg Markets with Paul Sweeney and Matt Miller.
How do you kind of view the volatility in the marketplace here? Everyone's focused on the vaccine rollout. Companies across industries really trying to shore up their balance sheets. These equity indexes just keep going up.
Breaking market news and insight from Bloomberg experts.
The strong dollar policy, I think, is a lot of its rhetoric. Because of all the dislocations, there's always relative value trades that you could be doing.
The only issue is how hot can home prices go?
It's the uncertainty, I think, that is really spooking everyone.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Good morning. It's a day it looks like we've seen many times before. Tech down, yields up, energy outperforming as WTI crude hits the highest level since 2014. Lisa Abramowitz and I, Kaylee Lyons, will have you covered on all things markets. We'll be speaking with Ryan Jacob, CIO of the Jacob Internet Fund, on the markets and his fund. And we'll also be talking about tech and investing in technology, how that is changing with Nisha Hati. She's Chief Digital Officer for Charles Schwab. But first, let's get you over to Greg Jarrett, who has a Bloomberg Business Flash. Greg.
Why, thank you, ma'am. Stocks are down, commodities are up as a global supply crunch and the threat of persistently high inflation are keeping investors on edge and away from throwing their money in. Lori Calvasina, head of the U.S. equity strategy at RBC Capital Markets, tells Bloomberg looking ahead, she is still optimistic.
No, we think that markets where they've been trading, where the highs have been this year, we think they make a lot of sense. We think you could see some further downside from here, but ultimately we expect it to be a buying opportunity.
Let's check the markets right now. If you're buying the dip, the S&P is down 0.4%, down 18. The Dow is up 0.1%, up 28, and the NASDAQ is down 1.25%, down 180. The 10-year is down 11.30 seconds. The yield 1.5%. West Texas Intermediate crude continues its surge. It's now up 2.5% at 77.80 a barrel. COMEX gold's down 0.25% at 17.5450 an ounce. The dollar yen 111.16. The euro $1.1629. The British pound $1.3627. Qualcomm and SSW Partners have agreed to buy automotive tech company Veoneer for $4.5 billion, nudging out Magna International after the car supplier refused to raise its bid. That's a Bloomberg Business Flash. It's time now for Bloomberg Markets. Kaylee Lyons. And is it Paul Sweeney today?
No, it's not Paul Sweeney. It's Lisa Abramowitz. But good guess.
Lisa.
Thank you. Hi, Greg. How's it going? Thank you.
Going better with you now. Thanks.
All right. Well, we'll talk to you in a little bit. Right now, we want to catch up with the great Dave Wilson and a really interesting downward shift to the tape right now. You're seeing the lows of the session, particularly on the NASDAQ. And I'm looking at Amazon. I really want to start there. It is now turned negative on the year. It is down more than 1%. Dave, how much of a sea change is this? How much does this show the degree of weakening and perhaps how much further there is to go?
I kind of take a step back from this and say...
You don't want to go either way?
Well,
Got
okay,
it.
Amazon's been up 6 years in a row. Let's start there. And you think about what's going on. You have to remember, as much as Amazon is tech-driven, at base, it's a retailer. So it suffers, at least to some extent, from the issues involving supply chains that are affecting a whole lot of other companies. And, certainly more so than, say, an Alphabet, the owner of Google or Facebook. So it's a different sort of makeup of the business at the end of the day. And that may, as much as anything, explain why Amazon, after all those annual gains, has now turned lower for the year. Just the idea that, they are susceptible, as so many other companies, to the difficulties in obtaining supplies and, getting them shipped.
Yeah, and obviously Amazon has a huge weighting in discretionary. That sector is in negative territory today. The big underperformers are your other tech-heavy sectors, information technology and communication services. But Dave, energy outperforming again. Can we just blame all of that on oil?
Oh, go ahead. Why not? Absolutely. I mean, you look at the best performers on the day in the S&P 500, and you see the newly renamed Coterra Energy, not long ago Cabot Oil and Gas. Biggest gain in the S&P 500 right now, up 5.4%. And then you see Devon Energy and then Oil Services, Halliburton, EOG Resources, Pioneer Natural. I mean, lots of these companies at the forefront of the gains. And yeah, I mean, a lot of it is being driven by what's happening in energy markets at this point with crude going up.
All right, and today was really interesting. I mean, Kayla, I know you've been covering this, the whole idea that OPEC Plus decided not to raise output, even as you see some of these pressures. And I do wonder what the pressure relief gauge will be at this point if you don't have OPEC supplying more. You've got a constrained shale. You have, all of these supply chain issues. Where do we stop? And this is the reason why you got houses like Bank of America coming out and calling for $100 oil.
And calling for $100 oil sooner rather than later. And OPEC really is sticking to its guns here. They are not willing to take the risk that we're going to see fluctuations in demand. They are going to keep it steady as it goes, even as oil prices higher. But to your point about all the margin pressure that Amazon is facing, Dave, it's not just in terms of, shipping constraints issues. These are other inflationary forces at work in this economy and in this market.
Well, sure. And, it comes down to consumers' willingness to spend, and which hasn't been an issue so far. But, with the holiday shopping season coming up and, the concern that's out there about whether there will be enough goods on hand, you might say, to be able to sell during that, key period of the year for retailers. I mean, there's a lot to be nervous about if you're Amazon, even with, let's face it, their focus on the internet and, cloud computing with Amazon Web Services and all that. I mean, it doesn't kind of leave them out of the equation, let's say, when it comes to, the supply issues that are out there.
It is time for Philosophical Monday with Dave Wilson. We want to talk about your feelings and also earnings that are coming up next week. You're like, thank goodness, I did not want to talk about my feelings. I didn't want to talk about philosophy. But there is this question of how much has been priced in with respect to these supply chain constraints, how much we're going to see another Nike, another Bed Bath & Beyond as we move into an earnings season where already, as we've seen from Amazon, as we've seen from so many places, there's already a lot of weakness that has been built in.
Yeah, and given the reaction, to the earnings out of Nike and the earnings out of Bed Bath & Beyond and some other companies, I mean, you do have to raise that question because, the concern has been, what happens to profitability? I mean, that is as much the key point as anything because, we've seen companies be able to maintain and in some cases increase profit margins even in the face of higher costs. They have enough pricing power. They can pass those costs and then some on to consumers. At what point does that cycle turn, becomes a real question, as we move into third quarter results. And let's face it, we're not going to see the kind of growth we saw in the second quarter in percentage terms, simply because of where things stand, say, relative to the pandemic.
Yeah.
I mean, the second quarter arguably was sort of the bottom for a lot of industries.
Yeah, the comparison's really tough. But speaking of the pandemic, Dave, we have to talk about vaccines because we just had a headline crossing the Bloomberg terminal. The EU drug regulator has approved the Pfizer and Moderna booster shot. So we are seeing Moderna, for example, come off of session lows, but still down around 4.5%, a second day of losses off of that Merck news that their COVID pill actually works pretty well.
Right. And so there are alternatives. I mean, that's sort of the question that's being raised in a sense in the minds of investors when it comes to where things head from here. And you got to remember, I mean, you look at BioNTech, the German partner of Pfizer, and you look at Moderna, and you're talking about, even with today's losses, these are stocks that have more than tripled this year. So, I mean, there's a lot built in. And so even the possibility that, some of the demand shifts toward pills and away from vaccines, well, I mean, that's something you can understand why investors would get a little rattled by that.
Okay, maybe it's just a rainy morning, and maybe it's just a Monday morning after spending the weekend with 2 active kids. But does it feel a little sleepy today? Because people don't really know where to go. You have, of course, earnings starting next week. You have the jobs report on Friday.
Well, you can argue that there's not necessarily going to be a whole lot of direction until you get to those events. I mean, that said, 0.6% decline, the S&P 500 is not nothing. And, given the kind of weakness we've seen the last few days, you could argue that it's a continuation of a trend, at least on some level.
Yeah, well, either way, Lisa, I'm feeling really sleepy, so I get what you're saying.
Thank you. Of course, you both have been here since God knows when.
You in 2, 3 in the morning.
There
it's nothing. Dave Wilson, what time were you in this morning? You have it easy.
5:45.
Yeah, I don't really feel bad for you on that one, but thank you for being here.
I'm
all
not
the same.
asking you to.
But thank you for playing.
All right, Bloomberg Stocks editor
you,
Dave Wilson, thank you very much. A look at all things market, but let's figure out what else is going on in the world and head to our 99.1 studios in Washington with Amy Morris for world and national headlines.
All right, thank you, Kaylee. The U.S. may be turning the corner on the most recent surge in COVID-19 cases, but Dr. Anthony Fauci says more people need to be vaccinated if the country is to continue that downward trend. You guys were just talking about drug maker Merck. When they announced last week they created that pill that could keep COVID patients out of the hospital, Fauci tells ABC's This Week that is a hopeful step forward.
In the placebo versus the drug group, in the drug group, there was 0 deaths. In the placebo group, there were 8 deaths. So that is, no matter how you slice that, that's impressive.
And sources have told the New York Times that Johnson & Johnson is planning to ask U.S. federal regulators early this week to authorize a booster shot of its coronavirus vaccine. Crews on the West Coast are scrambling to clean up a devastating oil spill in Southern California that has reached coastal wetlands and closed miles of beaches in Orange County. Ocean conservation nonprofit Oceana Chief Policy Officer Jackie Savitz.
Oil isn't just one toxic chemical. Oil is actually a toxic chemical soup. And so there's a lot of different chemicals that are in the oil. Some of them will actually dissolve in water, which is bad news for the fish.
Now, Supervisor Katrina Foley represents the Huntington Beach area of California, and she's calling for an investigation. The Nobel Prize Committee this year has decided to award the Nobel Prize in Physiology and Medicine jointly to a pair of U.S.-based scientists. Thomas Perlman is on the Nobel Committee.
To David Julius and Ardem Pataputian for their discoveries of receptors for temperature and touch.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
Your business.
The world's financial decision makers connect on the Bloomberg terminal. The buy side and the sell side together, collaborating across markets and countries in real time, sharing ideas, negotiating trades, and forming an influential network of over 325,000 financial professionals that helps power global markets. Isn't it time you join them? Request a demo at bloomberg.com/professional.
Business landscape is ever-changing.
There could be a lot more selling to come.
Ours is too.
Just getting some headlines I want to bring to our audience.
The president's saying that this is a pandemic of the unvaccinated.
We have something else in common.
Small caps continuing to feel the pressure.
We seek out the latest business news wherever we are.
A deep drop in Asian equities overnight.
Let's bring you some breaking news in terms of earnings.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Wake up and text. Text and eat. Text and meet up with a friend you haven't seen in forever.
Hi.
Oh, hey. Text and complain that they're on their phone the whole time. Text and listen to them complain that you're on your phone the whole time. Text and whatever. But when you get behind the wheel, give your phone to a passenger. Put it in the glove box. Just don't text and drive. Visit StopTextsStopWrecks.org. A message from NHTSA and the Ad Council.
Would you say it's more important to gather information fast, or to have it first, or to be the most accurate?
They can really move the needle when it comes to programs.
The point in all this surely is the level of support you'll get from companies for this.
What if you don't have to choose?
It also has enormous importance for the labor market.
How do they get ahead of different administrations?
We see this move towards digital currencies.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
1 in 3 adults has prediabetes. 1 in 3. That means it could be you, your football buddy, your football buddy, or you, your best man, your worst man, you, your dog walker, your cat jogger. While 1 in 3 adults has prediabetes, with early diagnosis, prediabetes can be reversed. Take the risk test at doihaveprediabetes.org. Brought to you by the Ad Council and its prediabetes awareness partners.
Economics.
Chairman Powell looks brilliant.
Finance.
Some breaking news for you. A share sale.
Investment.
The narrative of the reopening trade has changed.
The Bloomberg Surveillance Podcast.
Do you want some volatility, Tom?
Please.
Do you want me to go there?
Tom Keene, Jonathan Farrow, Lisa Abramowitz, and the names that shape the world's markets.
Joseph Stiglitz of Columbia University, the laureate.
Bloomberg Surveillance. Listen today at Bloomberg.com, the Bloomberg Business app, or subscribe on Apple Podcasts. When Paul Sweeney and Matt Miller bring you the day's market news.
How do you think investors should view Bitcoin?
You can count on some frivolity.
We've never taken them to Disney, so just failure on so many different fronts.
Bloomberg Markets. Extensive, essential, and endlessly entertaining.
I'm not a pet person. I'm a financial analyst. By the way, someone writes in and says, I didn't realize Paul hated American values.
Weekday mornings at 10 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com.
Adopt US Kids presents What to Expect When You're Expecting a Teenager. Learning the lingo.
GOAT, G-O-A-T, acronym, stands for Greatest of All Time. As in, spaghetti sandwiches for dinner? They're my fave. Dad, you're the GOAT.
You don't have to speak teen to be a perfect parent. Thousands of teens in foster care will love you just the same. Visit adoptuskids.org. Brought to you by the U.S. Department of Health and Human Services, Adopt U.S. Kids, and the Ad Council.
Burden LLP Accountants and Advisors presents Tax Chat with Lisa Goldman, partner and leader of Burden's International Tax and Advisory Practice.
It's a smart business practice to diversify your investment portfolio, and many investors look for opportunities in different countries to achieve this objective. However, investing overseas can be complicated and often requires working with a specialist who has a firm grasp of both domestic and international tax law. At Burden Accountants and Advisors, our experienced team works with clients to help them develop cross-border tax plans that minimize their tax liabilities, ensure compliance, and save them money.
If you're a high net worth individual or a business owner, let Burden help protect you, your family, and your business. For more tax chat from Burden Accountants and Advisors, visit burdenllp.com. That's BERDONLLP.com. Burden Accountants and Advisors. We listen, we solve, we do.
Where are today's real testing grounds for the latest innovation? Places where advancements in health, transportation, and business happen every day. Cities. Today, cities lead the way, taking local solves and turning them into global solutions. Now, introducing Bloomberg City Lab, a new platform covering the present and future of global cities. Learn more at Bloomberg.com/CityLab. Brought to you in partnership with Hyundai.
This is Daniel Blazer. I'm a trustee of the Jewish Communal Fund and chair of the Special Gifts Committee. Back in March, when the world came to a grinding halt with the coronavirus crisis, I turned to the Jewish Communal Fund to make grants to charities that were important to me. Our community of fund holders responded generously, and so did JCF. Through our Special Gifts Fund, which functions like an endowment, JCF made a grant of $1 million to UJA Federation of New York and the Metropolitan Council on Jewish Poverty to fight food insecurity and provide much-needed assistance to Holocaust survivors and single parents who have been impacted by the crisis. If you are not using a donor-advised fund for your giving, now is the time. Working with the Jewish Communal Fund is easy. It's convenient, it's efficient, and it enables you to focus on your charitable giving, especially in difficult moments like these. To find out how JCF can maximize your charitable impact and reduce your tax burden, visit jcfny.org.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Sponsored by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit Commonwealth.com to learn more. The S&P is down with losses stalled near the index's average price for the past 100 days, a level the index has held during virtually every sell-off in 2021. Let's take a look at those numbers. The S&P right now is down 0.5%, down 24. The Dow's down just less than 0.1%, down 26. and the Nasdaq's down 1.5%, down 214. The 10-year's down 11.30 seconds. The yield is 1.49%. West Texas Intermediate crude's up 2.5% at 77.77 a barrel. That sounded nice. COMEX gold's down 0.2% at 1754.70 an ounce. The dollar yen 111.14. The euro $1.1634. The British pound $1.3631. Facebook shares are falling sharply, with the social media company dropping to its lowest level since June. The losses come after a former product manager at Facebook said the company prioritizes profits over the well-being of its users. Facebook's down 3.5%. That's a Bloomberg Business Flash. Bloomberg Markets continues now. I'm telling you what, we've got a great lineup today. We've got Amy Morris, we've got Kaylee Lyons, and
who? I'm waiting for it.
And who? Oh.
Lisa Bromwitz. Thank you so much, Greg Jarrett. We really appreciate it. Right now, we are looking at markets that are going deeper into the red. And just now, Kaylee, as you just pointed out, a headline crossing that New York City says that 95% of school staff is vaccinated following the mandate that went into effect today, that teachers had to be at least have gotten their first shot. Otherwise, they could be put on leave. And they're saying that they've got 95% in compliance. Interesting to see, really, being sort of on the precipice of this debate of mandates.
Yeah, absolutely. And you're seeing it play out so differently in different states and different sectors where there have been more legal challenges to this. But it's pretty remarkable the jump we have seen in vaccination rates as soon as a mandate goes into place. Some of the hospital systems had vaccination rates around 40%, and now they're also in the 90s as well, now that you've put people's jobs on the line. So it is something that is working even for all of the debate that's around it.
And this really translates into just where we are in coming out of the pandemic and how this translates to a market call, as we do seem to be on the downward swing in the number of cases and hospitalizations. Ryan Jacob has to evaluate this along with the Fed, along with the debt ceiling debate, along with all of the mess in Washington, D.C. and beyond, all the way to China. As CIO of the Jacob Internet Fund, talking here with us. And the reason, Ryan, why I say that is because you kind of have to dovetail a rates call, a global macroeconomic picture, with your view on tech more than ever. How do you sort of gauge this connection between rates and the tech sector?
Well, I do think we're a bit in the minority in that we're not that concerned about higher rates for our particular portfolios, whether it's the ETF or the mutual funds, because we tend to focus on smaller mid-cap tech companies. In terms of the large, higher interest rates, we're really seeing more of an impact on the large and mega-cap technology companies that, quite frankly, will have a more difficult time overcoming the headwind of higher rates in terms of revenue and earnings growth. More of the companies we focus on are higher growth companies and should be able to overcome it, basically.
Well, there's the rates headwind. There's also a China headwind for technology, Ryan. And I was looking through some of the holdings of your fund and saw that Alibaba and Tencent are in there. How worried are you about that crackdown that's happening in China? And does that make you want to rethink some of those holdings?
Well, we have been shareholders in Chinese companies for over 15 years now. So we've seen a lot of highs and lows. Admittedly, this is probably one of the low points that we've seen in terms of, what's happening in China and the ramifications for these companies. And admittedly, we had cut back our positions considerably. They're probably two of our smallest positions at this point. And quite frankly, until conditions improve or we see it, I doubt we'll increase our allocation.
What type of technology companies are you seeing as the greatest opportunity at a time when we already have priced in some of the shift to working from home, or we already have priced in some of the internet prowess of the likes of Google and Facebook and sort of the dominance that they have there? What types of tech should we be looking for?
Well, that is the biggest challenge this year. Which companies can build on the success of last year, and which companies will have a fall off or kind of come off a bit of a sugar high in terms of the impact to their business. And so the companies we're focusing on are the ones where broader adoption's been accomplished, and now we see an acceleration. And that's what we've seen across our portfolio. So, there's a host of names that really fall in that category, but it's a very, very tricky environment.
Well, give us some of those names, Ryan. Can you get specific? Which companies in particular are most fascinating to you right now? Well,
one of the companies, it's one of our larger positions, OptimizeRx. basically has electronic health record advertising and communication services. So this is something that the drug companies were very interested in pre-COVID. Once COVID hit and sales reps could no longer go out, no more industry conferences or events, they allocated more money to digital and across different platforms. Optimize benefited from that. And then I think when a lot of the drug companies realized the returns they were getting from these investments, they've been basically accelerating ever since, even with the prospect of going back to more traditional methods to advertise their products. And Optimize has seen that the bump last year and now an acceleration in their pipeline this year.
Ryan, before we let you go, when you take a step back, everyone wants to be a tech company. McDonald's wants to be a tech company. Who doesn't want to say that they are on the cutting edge of what's next? How do you parse out what actually fits with your Band-Aid?
It's a great question because every company incorporates tech, and it's not an experimental part of their budget. It's core to what they do. So it's becoming harder and harder. The fund is the Jacob Internet Fund, the mutual fund. But now that was launched over 20 years ago, and things have changed and evolved. And it is a constant challenge. It actually widens the investment universe for us. So actually, in some ways, it's been helpful.
All right, Ryan Jacob, CIO of the Jacob Internet Fund, talking to us about all things technology. Thank you so much. But Lisa, it's such an interesting time for tech because you have the higher rate story. We know it so well, this kind of rotation out of some of the growth names and into value. But it feels like earnings season always kind of changes the game a little bit because you see the numbers some of these companies put up. Doesn't entice people to buy them still, even in a higher rate environment.
And this is an incredible time for smaller tech companies to raise money. The concern that a lot of companies have, though, is how do they get ahead of the behemoths without being acquired by said behemoths, or at least have their technology somehow co-opted by them? Meanwhile, just looking at the NASDAQ, it's down almost 1.7%. It's sort of on a downdraft as we head it later into the session, Kaylee.
Yeah, absolutely. You're seeing communication services in particular, the big underperformers today. Of course, that's where the likes of Alphabet and Facebook live. It is the mega cap tech stocks underperforming as yields tick up. We're at 149 on the 10-year.
This is If knowledge is power, the Bloomberg Terminal is your power up, connecting you to real-time financial data, market-moving news, powerful analytics, and an influential network of financial decision makers around the world. Share ideas, negotiate trades, and gain the insight you need to make more informed decisions. See how the terminal can take your workflow to the next level at Bloomberg.com/professional.
Bloomberg Money Minute. Demand for Teslas is stronger than expected. Tesla delivered more than 241,000 new vehicles worldwide in the third quarter. That's a record for the electric car maker, even as the auto industry at large has been facing challenges caused by the global computer chip shortage. Movie theater giant AMC has had its strongest opening weekend since just before the pandemic started. Venom had the second best box office ever for a film debuting in October. Close to 2.5 million attendees showed up at AMC theaters in the U.S. this weekend. More than 13 years after Lehman Brothers filed for bankruptcy, the fight for the last scraps of the investment bank continues. Deutsche Bank is behind a last-ditch deal bid to collect money from a bet it made on obscure notes issued by Lehman before its collapse. Holders of the notes hope to collect up to $678 million. Tough start to the week for Wall Street. Dow right about flat. NASDAQ losing 1.5%. S&P 500 down 0.5%. I'm Andrew Rote, Bloomberg Radio.
And Mama, how you feeling?
Great, and I'm ready for you today.
I'm checking in on you. Morning meditation?
Check.
Dressed and ready to work out?
Check.
Check your blood pressure yet?
And check.
Boom! Great job, Mom. And about those gold earrings?
No, ma'am.
Now more than ever, it's important that we protect our hearts and the hearts of those we love. Monitor your blood pressure daily and help each other stay motivated. Rally your squad to take the online pledge at releasethepressure.org. Brought to you by the Release the Pressure Coalition and the Ad Council.
Before and after the pandemic.
Is it driven by politics or by science?
That may be how we keep track of our lives from here on out.
What do you think the political effects of that impatience will be?
And through it all, there's been Bloomberg.
We begin on Capitol Hill.
The most accurate business, world, and healthcare news before and after.
The fundamentals do not justify this price action.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. Are you interested in a challenging and exciting career? One where you can be part of solving complex challenges across industries and geographies. Bloomberg's ever-expanding technology, data, news, and media services foster innovation, empower clients, and offer nearly limitless opportunities for career growth. Visit Bloomberg.com/careers today to view our current job opportunities. Bloomberg LP is an equal opportunity employer. The address once again is Bloomberg.com/careers.
Hi, everyone. Al Roker here. As a guy with his own catchphrase, I appreciate that Smokey's only said,
"Only you can prevent wildfires."
But I'm filling in because there's a lot more to report. Like when there are parched or windy conditions out there, you gotta be extra careful with things like burning yard waste. After all, wildfires can start anywhere, even in your neck of the woods. Go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
I spend a lot of time in the garage, but even more time in the rain, sleet, and mud. In '95, I helped tow your moving trailer. In '05, I helped you get out of a ditch. Yeah, I know I'm a bit rusty, and sadly in '09, it was sparks from me, your handy chains, dragging behind your truck that accidentally started a wildfire.
Sparks from dragging chains can start a wildfire. Spark a change, not a wildfire. Visit SmokeyBear.com. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
Only you can prevent wildfires.
How are financial services firms managing in this new reality? Claire Santaniello, Managing Director at BNY Mellon's Pershing, explains.
If the current times have taught us anything, it's the critical role that technology plays in client relationships. Global conditions have created a business imperative for firms to digitally transform the way they meet client needs and the way they work. Pershing's industry-leading technology enables you to adapt to the evolving ways your clients want to do business, now and in the future, and can help you build an even stronger digital client experience in a simpler, smarter, and safer environment. We have worked with clients of every size to transform their business. Pershing gives you the foundation to stand on, plus our unique perspective, to help you run your business even during the most uncertain of times. We help you consider everything.
To learn more about how Pershing can help you transform your business, visit Pershing.com. Pershing LLC, member FINRA, NYSE, SIPC.
And what you doing with your phone? Taking pictures?
No, I'm asking it questions.
Like what?
Hey, Bobo, do flowers have best friends?
I'm sorry. I'm afraid I don't know that.
Hey, follow me. I want to show you something. Look, flowers do have best friends.
Whoa.
Some answers can only be found in nature. Discover the unsearchable. Visit discovertheforest.org to find a trail near you. Brought to you by the United States Forest Service and the Ad Council.
It's the closest thing you can find to a masterclass on how the world works.
The United States has lost a tad of credibility.
Bloomberg Balance of Power.
Are we fulfilling those commitments at this point?
Weekdays at noon Eastern.
Can you give us the priorities?
On Bloomberg Radio. Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130. To Washington, D.C. Bloomberg 99.1. To Boston. Bloomberg 106.1. To San Francisco. Bloomberg 960. To the country. Sirius XM Channel 119. And around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Markets.
This is Bloomberg Markets. We have a great half hour coming up. We're going to talk to Ethan Devitt about the markets, but also about ESG and her outlook on inflation. Plus, we'll get our Bloomberg Big Take story. It's all about that UK energy crisis. We'll talk to Lizzie Burden about that. But first, let's hop on over to Greg Jarrett, who has a Bloomberg Business Flash. Greg.
We've coasted further into the red. The S&P, for example, is down over 1%. Stocks are continuing their decline, but commodities, gold and oil, seem to be rallying as the global supply crunch and the threat of persistently high inflation keeps investors on the edge. Let's see how far out on the edge we are. The S&P is down over 1%, as I said, down 45. The Dow's down 0.7%, down 230. And the Nasdaq's down 1.9%, down 271. The 10-year is down 7/32 with a yield of 1.48%. West Texas Intermediate crude is up 2.6% at 77.88 a barrel now. COMEX gold is up 0.2% at 17.6150 an ounce. The dollar yen, 110.99. The euro, $1.1629. The British pound, $1.3625. I was asked to tell you what silver's doing. It's little changed at $22.55 an ounce. Airline losses from the pandemic are set to surpass $200 billion as travel curbs weigh on corporate and long-haul demand well into 2022. This is according to the International Air Transport Association. Carriers are poised to post a collective deficit of $11.6 billion next year. That's a Bloomberg Business Flash. Bloomberg Markets continues now with Kaylee Lyons and Lisa Abramowitz.
Thank you so much, Greg Jarrett. There is, of course, the big elephant in the room for anyone who covers markets right now. It is inflation. What your viewpoint on it will determine much of how you position for it. However, which way is up in the air in terms of depending on who you speak with. We're going to speak right now with Ethan Devitt, Chief Investment Officer at Moneda, with $27.4 billion of assets under management. Ethan, before we get into your inflation call, how do you use this to shape what you want to buy?
Inflation is something we look at always as a part of the factors that drive where our portfolio should be positioned. Our goal is that our client portfolios should be resilient to many risks, in particular inflation. So we look at the different components of that portfolio, such as equities and real assets, and want to ensure that we have enough diversification into them because some have explicit linkage to inflation, such as real assets and real estate, and then some have a de facto positive correlation to inflation, such as equities.
Well, let's talk about some of those equities. The NASDAQ 100 is now down 2% on the day. We can maybe attribute some of that to higher yields. How do you think about technology and the place it does or does not have in your portfolio right now?
Technology will always be a huge component of our portfolio, particularly because many clients will have exposure to large cap stocks. And quite frankly, the FANGs have really comprised such a large percentage, an increasingly large percentage of those large cap portfolios. So it is a linchpin. And we actually saw that they performed very well. Obviously, we spoke, your earlier guest, about the stay-at-home stocks and how they really were quite resilient throughout the COVID crisis. And any time there's a crisis of confidence, they do seem to rebound. So technology will always have a huge component there. We do look to have balanced portfolios across growth and value. But the fact is, with technology and interest rates, if anybody does use a DCF valuation as interest rates rise, well, that will make the future earnings look that bit less in technology. So that seems to be part of the correlation that we're seeing.
How do you view the sort of decline that we saw last week that's carrying over to today? Is this the beginning of something bigger, or is this a blip that you want to dig in and kind of start buying?
I do think it is not the beginning of something bigger, because what we're seeing is a tremendous amount of assets on the sidelines. They've been sitting there waiting to get exposure to equities. And what we see is that every time there is a correction in equity markets, or even just a blip, as you say, or just a crisis of confidence, it doesn't last very long. And that's the real phenomenon of the current cycle, is that none of these adjustments last for very long because there's such a large amount of money on the sidelines looking to go in. Where did the sentiment dip come from? Certainly, there's a lot of backdrop now in terms of both geopolitical concerns. We're looking globally. We've seen the specter of a large-scale default. There's a political gridlock again. The news on the virus seems to be moderating, and that probably has not really factored into sentiment. But certainly, the tech news you mentioned earlier around Facebook, that is just a reminder of the ability for regulatory whiplash to occur, not just in China, but also here.
Well, I'm so glad you brought up China, because we continue to watch the Evergrande saga unfold day by day by day. And that's frankly not the only issue you have to worry about there. You have the ongoing regulatory crackdown. You have a broader slowdown in economic growth. How do you think about China right now and the risk that it poses?
Certainly, we've had to completely rethink how we think about China as a source of risk. There is even a suggestion among some commentators that China has become uninvestable. Such has been the frequency of these negative surprises that we've seen time and time again. It seems every week there is a negative surprise. What I would say is that China is only going to be a portion of an emerging markets allocation. And even emerging markets is only a portion of a non-US allocation. So it really is quite risk controlled within a portfolio. And as for whether that is sustained as that portion, well, that really remains to be seen. Certainly the risk reward has changed dramatically. And what we can see for China is, just as it was first in and first out of the pandemic, it can certainly be a harbinger for concerns that will perhaps go more global. And the Evergrande is a great example. Some traders in this market have never seen any kind of a large-scale default of that nature. The last time we saw it was in 2008, and many people's whole careers have been built since 2008. So that simply is a reminder of just the specter of a large-scale default, what it can look like, and how it can ripple through the system, not just for other real estate developers, but for banks, financial institutions as well. It is a salutary reminder, I believe, of some of the risks that can actually be there bubbling under the surface.
Are you more concerned about the financial risk here or the economic risk of a slowdown in China percolating through the entire ecosystem through the supply chain disruptions and other sort of transmissions that are more insidious and slow moving?
Certainly, I would say that the impact of a slowdown in China is going to be less felt over here. The U.S. has been the engine of developed markets for some time, and I don't see a slowdown in China as really having tremendous ramifications here. We've already had significant change in the trade conditions, and that is likely to persist. So I don't see that the U.S. is particularly dependent on China, but certainly China does affect the fortunes of the surrounding emerging markets, and for that reason, any slowdown there would just be poor for global growth.
All right, Ethan Devitt, CIO of Moneta, giving us her market outlook and her take on inflation. And Lisa, the China story, getting a little bit more interested today when you talk about the trade narrative that Ethan just brought up. We obviously got some harsher words out of the Biden administration. We're waiting for the U.S. trade representative to speak later on today, but basically saying they're not holding up their end of the bargain when it comes to that phase one deal.
Right, but what's going to be the potential ramifications for that at a time when the United States is seeking goods and is frustrated by a lack of them because of the supply chain disruptions? How much does that complicate the negotiating position of the United States? I do wonder how much they're trying to toe this line as they try to lift tariffs while also having enough of a stick to get China to come along.
Yeah, it's such an interesting point. Was it Nike that said it now takes 80 days to get a sneaker from that region here? It used to take 40.
It's record wait times, and we're coming up to the holiday season. I mean, where are you going to get your Yeezy sneakers?
There is not a lot of inventory out there. Amy Morris is ready for the holidays. Let's head over to her in our 99.1 studios in Washington, D.C. for world and national headlines.
Well, thank you, Kaylee. No, I'm not. The Facebook whistleblower says the Facebook of today knows the damage it is doing with hate and misinformation, but has decided not to do anything about it. Let's get the story from Bloomberg's Ed Baxter.
Frances Haugen on 60 Minutes says she has over 10,000 pages of internal communications to prove her claims. She says flatly, Facebook is only interested in money.
When we live in an information environment that is full of angry, hateful, polarizing content, it erodes our civic trust. It erodes our faith in each other. It erodes our ability to want to care for each other. The version of Facebook that exists today is tearing our societies apart and causing ethnic violence around the world.
She says she just needed to go public. She testifies before Congress tomorrow. In San Francisco, I'm Ed Baxter, Bloomberg Radio.
It is being called the biggest leak of offshore banking data in history. A new report dubbed the Pandora Papers includes millions of leaked documents detailing how the wealthiest among us hide their assets from authorities and tax collectors. Reporter Will Fitzgibbon of the International Consortium of Investigative Journalists tells ABC their investigation shines a light on trust companies based in the U.S.
This investigation should make us all wonder how and why the world's rich and powerful are able to play by different rules that grant them financial and business benefits that the rest of us don't have access to.
The report looks at companies in South Dakota, Nevada, and Delaware, where critics say weak transparency laws allow the wealthy to hide their fortunes. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg.
If knowledge is power, the Bloomberg Terminal is your power up, connecting you to the real-time financial news, data, and analytics that can take your workflow to the next level. Power up at Bloomberg.com/professional.
Managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management.
I'm Steve Meyer, President, Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at seic.com/seize change.
As a research university, NJIT makes smart technologies even smarter. That's why NJIT graduate and civil engineer Anya O'Dwyer says the university is so important for her industry.
Construction and civil engineering is always going to have cranes and, people and movement, but how we're designing and implementing things, that's what's changing. We have millions of data points now that we never had before, and that's allowed us to think about planning and design in a way that we haven't done so before. NJIT is very much at the forefront of that. Collecting data, understanding data, manipulating data, having access to a facility like NJIT, which is constantly focused on research and innovation, is so important for the industry and what it means to be designing for smarter systems.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
When will you be able to go to a meeting where nobody smells like hand sanitizer? Who knows? But we can give you the latest business and financial news, fragrance-free.
Let's tease out some of what you just said.
Are there tools in the toolbox for the Fed? Does that point to the need for continued monetary support?
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com.
You do realize the mark that this is having on a younger generation.
Bloomberg, the world is listening.
Wake up and text. Text and eat. Text and catch the bus. Text and miss your stop. Wait. Text and be late to work.
Sorry, I'm late.
Text and work. Text and pretend to work. Text and act surprised when someone calls you out for not working.
Who, me?
Text and meet up with a friend you haven't seen in forever.
Hi.
Oh, hey.
Text and complain that they're on their phone the whole time. Text and listen to them complain that you're on your phone the whole time. Text and whatever. But when you get behind the wheel, give your phone to a passenger. Put it in the glove box. Just don't text and drive. Visit StopTextsStopWrecks.org. A public service announcement brought to you by the National Highway Traffic Safety Administration and the Ad Council.
Hi, it's Olivia Munn with my shelter pets, Frankie and Chance. Say hi, guys. When I adopted them, I discovered that they both have incredible personalities. Chance's sole purpose in life is to love and to be loved. Frankie is a little bit of a scoundrel and always entertaining. They're a little bit of a lot of things, but they're all pure love. Adopt pure love at theshelterpetproject.org. Brought to you by the Ad Council, the Humane Society of the United States, and Maddie's Fund.
Burden LLP Accountants and Advisors presents Tax Chat with Richard Goldstein, Senior Principal and Co-Leader of Burden State and Local Tax Practice.
COVID-19 pandemic state and local government restrictions have caused many people to shelter in place outside their primary state of residence. The new normal of remote working has proliferated potentially costly state and local tax residency issues. For example, if you live in Manhattan but have been residing and working in Connecticut because of the pandemic, you may be a resident of one or both states and potentially taxed twice on the same income. At Burden, we help clients develop a plan to address double residency concerns and non-resident income allocation to minimize their overall tax liability. If you're a high net worth individual or a business owner, let Burden help protect you, your family, and your business.
For more Tax Chat from Burden Accountants and Advisors, visit burdenllp.com. That's BERDONLLP.com. Burden Accountants and Advisors. We listen, we solve, we do.
Accounting professional Liam Cohen, CPA, a trustee of the Jewish Communal Fund, and Sephardic Beaker Holem, talks about why he uses JCF's donor-advised fund and recommends JCF to his clients.
JCF is an organization that I've worked with for many years, both personally and in my accounting practice. The ease of giving and managing my donations through their website is very effective. Using it for tax planning and managing all of my charitable giving through one place. JCF's endowment helps support Jewish organizations throughout the tri-state area, and that's very important to me and my clients.
JCF's Donor Advised Fund is the smarter way to give back. Let Jewish Communal Fund maximize your clients' charitable deductions and streamline their charitable giving. Since JCF handles all the administration, get started now at jcfny.org or call 212-752-8277. We have a gift for giving.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Well, stocks got on the elevator and pushed the down button. The S&P is down, led by losses of high-growth tech companies, including Amazon.com and Facebook, while vaccine makers were also lower on Merck's announcement about an effective COVID-19 drug. Meanwhile, energy and material stocks are higher along with commodity prices. Let's look at those prices. The S&P is down 1.2%, down 53, while the Dow's down 0.9%, down 300. The Nasdaq's down 2.1%, down 310. The 10-year is down 5/32. The yield 1.47%. West Texas Intermediate is up 3% at 78.13 a barrel. COMEX Gold is up 0.7% at 17.70.60 an ounce. The dollar yen 110.90. The euro $1.1636. The British pound $1.3627. What's going on with oil? It's jumped to the highest since 2014 with OPEC Plus's decision to proceed to hike output gradually, and that surprised some investors who expected a bigger increase in the wake of a shortage of natural gas. That's a Bloomberg Business Flash. I'm Greg Jarrett. Now we continue. Lisa Abramowitz and Kaylee Lyons.
This is The Big Take, the best of Bloomberg's in-depth original reporting from around the globe.
We're running on a financial system that's running on old technology.
We're seeing house prices reach fresh record highs.
What unfolds in midterms, we will no doubt see again in the next presidential election.
The Big Take on Bloomberg Radio.
Today's Big Take is one of the most important issues of the day, especially as Greg Jarrett talks about the fact that oil prices are surging in the United States to the highest since 2014. How much of a template is what's going on in the United Kingdom for the rest of the world? How idiosyncratic is it facing record high energy prices heading into a winter at a tenuous period? Joining us now, we are so lucky to have Lizzie Burden of the United Kingdom. She is UK economy reporter for Bloomberg News, and she is one of the co-authors of this fantastic piece taking a deep dive into the energy crisis facing the United Kingdom. Lizzie, let's start there. How idiosyncratic is this to the region?
Well, let's not forget that the UK has been through Brexit. So we're seeing these fuel shortages, lines of cars just waiting to get gas, and lots of petrol stations don't even have any. And that comes down to the shortage of truck drivers. And lots of them came from the European Union. They went home during the pandemic and they haven't been able to come back because of post-Brexit visa rules. I mean, this problem affects lots of different countries, but it's particularly bad in the UK because of Brexit. There's a 400,000 shortfall across Europe, but 100,000 of that is in the UK. When it comes to energy, it's also a worse situation because the UK is so dependent on Europe for storage. And that's something that UK households are waking up to at this point. Among top UK imports is natural gas for heating and generating electricity. So the UK is really at the behest of European countries this winter if they want to pass urgent measures to stop exports for a certain period.
Lizzie, let's talk about the political implications of this, because the Conservative Party is having its annual conference in Manchester this week. That's where you are right now. Does this seem to be affecting Boris Johnson and his party and their popularity in the polls?
No, it's not even moving the dial, which is baffling, really. The party, to own this narrative, they're saying, look, we've got a labour shortage of truck drivers. That industry is now increasing wages because those wages have been suppressed for a decade since the financial crisis. And the government's saying this is what people who voted for Brexit wanted to happen. People wanted a higher wage, more productive economy. But the reality is that it's only more productive when you get more output for those wages, and that's just not the case in the UK.
How has this shaped the political discussion around immigration, given that we heard from Boris Johnson today saying this wasn't going to change his stance on still having a relatively limited immigration policy?
Yeah, so the government's saying that it should only be controlled immigration. So they've granted 5,000 visas for truck drivers of food and fuel in the 3 months up to Christmas to avoid a Christmas crisis. But business leaders are saying that's like throwing a thimble of water on a fire. It's 5,000 visas when you've got a shortfall of 100,000 drivers. So, the government really hasn't changed its immigration stance that much. It's sticking to its Brexit line.
Obviously, these labor shortages that the UK and so many other countries are dealing with are also happening at a time where you have the furlough program now ended in the UK. So how does that kind of change the dynamics in the labor market in Britain?
Well, it's a very difficult time in the labour market because we've had the end of the furlough scheme, which supported 80% of people's wages until just last week. So there's been lots of speculation for many months that you'd have a spike in unemployment. But that wasn't reflected in the latest jobs data. It's not what the Bank of England's expecting. So we're not really going to know how the end of furlough has impacted the labour market until at least December. The Bank of England said it really wants clear data before it hikes interest rates and does its first post-pandemic rate rise. But the unemployment data is so lagging and volatile, we just aren't going to have that until December. So economists are scratching their heads as to what the Bank of England needs to justify a rate hike, because if it's going to do it this year, which it says that it could do it before the end of the asset purchasing programme, we aren't going to have clear data until December.
Meanwhile, we're seeing oil prices surge more broadly, and a lot of people say that the world is not ready to transition into the greener energy sources that a lot of people would like to see in order to meet certain quotas to reduce emissions. Can you talk a little bit about how much of the energy crisis in the United Kingdom is driven by the high oil prices versus the idiosyncratic issues that you're talking about, like Brexit and some of the political crosswinds?
Yeah, I mean, as I say, part of the issue in the UK is domestic gas prices have more than tripled this year, and it comes back to storage because Britain is so very heavily reliant on European storage. You have had the worst. You've had very colder than average winters that have left Europe's stockpiles depleted, but it's this reliance on storage that's making the situation in the UK so much worse. And you've got charities warning that households aren't going to be able to afford to heat their homes this winter. They'll be relying on extra blankets just to keep warm. And it just makes the Brexit story feel real for the average person. For many months, people might have been able to get on with their lives without really thinking about Brexit. It was just something that affected, businesses who have got more paperwork. But it's getting real for the average Briton at this point.
Well, and that's for the average person, but clearly this also has the potential to exacerbate existing inequality issues because, there are going to be some people who can deal with higher utility bills, but there are a lot of other people out there who aren't going to be able to do so easily.
100%. And that's one of the themes of this Tory party conference where I am at the moment. The issue of the cost of living, as well as ending the furlough scheme, the government's ended this temporary £20 a week uplift in universal credit. That's benefited 6 million individuals, and it's being taken away. And so there are lots of questions about what the government's going to do about the cost of living. So today the Chancellor's announced that he's going to spend £500 million expanding jobs programmes, but really the emphasis from the government now is turning from benefits to skills. How can they address the the skills mismatch between people who are becoming unemployed, coming off the furlough scheme, and now are going into these million-plus vacancies, which is a record in the UK.
Well, a lot of people are feeling this energy shortage. Thank you so much to UK economy reporter for Bloomberg News, Lizzie Burden. She has our big take story today, why Brexit Britain is isolated, vulnerable, and running on fumes. You can read it on the terminal or on Bloomberg.com. This is Bloomberg.
If trending 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and at Bloomberg Quick Take, this is Bloomberg Radio. This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Lower for longer. We hear that from Fed Chairman Jay Powell.
One of the best ways to watch inflation is with the break-evens.
A potential downside of a Biden administration is higher taxes.
We've got to vaccinate the whole world.
Breaking market news and insight from Bloomberg experts.
You can't have a narrow slice of the country doing well and everybody else doing poorly.
Are we looking at a more damaging break in the labor market?
We're looking at late 2021, early 2022, where it really feels quote-unquote normal.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Welcome to the second hour of Bloomberg Markets. I am not Matt Miller or Paul Sweeney, and neither is Kaylee Lyons, but I'm Lisa Abramowitz alongside Kaylee Lyons today as we look at a true sell-off, the sell-off deepening, particularly in tech stocks, with the NASDAQ down more than 2%, the S&P down nearly 1.5%. What is the smell of stagflation? Can we use that word? No, it is controversial, but we have slower growth and higher prices, and it is getting a lot of people's attention, in particular the oil world right now. Right now, though, we want to head over to our own Greg Jarrett for a Bloomberg Business Flash to get an update on those price moves.
Lisa, I'm busy investigating what you guys did with Paul and Matt. I'll report on that later today.
Thank you. Please let us know.
Stocks are lower, as you may have noticed. If you glanced at your terminal anytime lately, the bond yields are ticking up, and investors are weighing uncertainty about the debt ceiling and indebted property developer China Evergrande Group. Bob Dahl, Crossmark Global Investments, tells Bloomberg, yes, the near term for stocks is a bit treacherous.
But we don't have the signs of a recession. Unless we have a recession, it's hard to see a big down move in the market. So I think we're going to tread water with a lot of volatility in both directions as we sort out what used to be a pattern that was almost all positive. Now it's just a bit more mixed. For example, inflation is not all transitory. I hope everybody finally gets a hold of that one.
Well, that may be what's happening here. The S&P's down 1.5%, down 66. The Dow Jones Industrial Average is down 1.2%, down 420, and the NASDAQ is down 2.3%, down 339. The 10-year is down 430 seconds, the yield 1.47%. West Texas Intermediate crude's up 2 3/4%. Fill them up. That's $78 a barrel. COMEX gold is currently up 0.5% at $17.67 even per ounce. The dollar yen 110.86. The euro $1.1624. The British pound $1.3602. Apple is set to release date of October 15th for its latest smartwatch, but they go on sale this Friday starting at 8 a.m. New York time. That's the Apple Watch Series 7, and Apple is down 2.6% at $138.95 per share. That is, of course, a Bloomberg Business Flash. I'm Greg Jarrett. Bloomberg Markets continues now with Lisa and Kaylee.
Greg, thank you. And as Greg said, we're seeing a lot of pressure for the major benchmarks today, but it is the large caps that are faring the worst. Small caps, not quite as hard. The Russell 2000 now only down about 1 percentage point. Let's get more with Bloomberg Stocks editor Dave Wilson, who is looking at all things small. Dave.
Indeed, only down 1.3%. That's where we are now, and the S&P 500 is lower by 1.6%. So indeed, smaller companies, smaller losses in today's trading. That said, the Russell's steepest drop belongs to REGENXBIO, whose ticker is RGNX. The gene therapy developer has lost 21.5%. It's lower for a second day in response to study results on an eye treatment. Friday it lost just 3.9%. So the decline is picking up. And a developer of a similar therapy, Adverum Biotechnologies, is higher after releasing study data late Friday. Adverum's ticker is ADVM, and that stock, well, it's higher at the moment by almost 9%. Ametis, ticker AMTX, is down at the moment 12.5%. The biofuel producer rose 21% Thursday and Friday after signing a supply deal with Delta Airlines. And Omeros, ticker OMER, is down 17%. It's lower for a second day after U.S. regulators raised issues with its bid for approval of a treatment for stem cell patients. Omeros sank Friday by 38%. But if you want to look at what's up in the Russell,
I do.
A lot of it is energy stocks. Given that oil prices are higher. Antero Resources, ticker AR, is up 8.2%, and Range Resources, ticker RRC, is up 6.8%.
Dave Wilson, thank you so much. As always, I love this small cap report because, frankly, it has been not exactly what you would expect. The idea that today it would not be down as much as, for example, Apple is notable. Right now, I want to shift to one area that has been hot, and that has been commodities. And the interesting thing is that we have seen stock sell off. We've seen bonds sell off in the past month. The one outlier has been oil. What has not been an outlier? Gold. It still is not acting materially as a hedge. Perhaps it's up a little bit today, but in general has not. What gives? When can this act as a traditional hedge against volatility? Ashraf Rizvi probably is wondering the same thing and probably has an answer. Chief Executive Officer and founder of Gilded, joining us here in New York. Right now, Ashraf, can you give us a sense of the dynamic behind gold and why it hasn't benefited from the risk-off feel in both stocks and bonds over the past month?
Sure. Thanks for having me on the program. I think gold is caught in this comparison of, is it inflation? I think most people believe that we are seeing inflation, whether it's transitory or not. The impact of potentially real interest rates going up with the taper. Physical demand, of course, has been increasing, but the dollar has been strengthening as well. So the combination of these four factors has kind of gotten gold in a bit of a quagmire where it can't decide whether it's really going up or down. That being said, I think we know that historically it has, over long periods of time, done very well, whether it's in an inflationary environment or even in a deflationary environment, particularly now that we're suffering through this significant increase in debt that's happening all across the world by governments.
So you see a case for holding gold here, at least in the longer term. How does what you do at Gilded enable people to own gold?
Yeah, that's a great question. I think the key here is that gold has, as an asset class, been difficult to own. So what we've really focused on is how can we make physical gold ownership functional? And so that really means making it digital, mobile, and usable. So let's leverage 21st century technology, a smartphone, a mobile device, a mobile app, and blockchain to be able to provide that physical ownership direct to you in a nice, easy way where you can be the direct owner of the property rather than a fractional banking system where it's an IOU, where you can leverage it to be able to do things like not only buy and sell, but even in certain countries we're already able to send or gift, and then be able to do other things. For example, earn ultimately a return, or be able to borrow or lend against it as well.
Ashraf, how much is this if you can't beat them, join them? Basically, people saying that Bitcoin was taking over for gold because people didn't want to have to store the thing and they wanted to have some sort of store of value. How much is it saying, okay, we get that. All right, but we'll give you the benefits of that, but we'll give you the absolute reality of gold, which has, lasted the test of time?
Yeah, I think it's a great question. Ease of use is always paramount, and I believe that one of the things that's happened with digital assets is they have made it easier for people to access. Physical gold has been hard for people to access, and so I think we're making it easier by making it digital, mobile, and usable. And most importantly, perhaps, is that marketplace is huge. It's a $12 trillion marketplace, probably the single most widely held asset in the world. Billions of people own it. Most every major central bank does. So it's really time to bring it into the 21st century rather than just being what a lot of people have claimed, which is that it's a very expensive paperweight. But by making it making it 21st century. We can make it usable for everyone and very functional.
Yeah, Ashraf, a lot of Bitcoin bulls call Bitcoin digital gold, but you are actually literally doing digital gold over at Gilded. That is Ashraf Rizvi. He is the CEO and founder of Gilded, talking to us about gold, which... Yes, Lisa.
I just
She's
love
smiling
the idea
at me.
of a really expensive paperweight. We now don't have paper to even weight down because everything's digital anyway. I mean, it just sort of talks about the other era.
Yeah, who even needs pens anymore? It's a brave new world. Brave new world where people don't need gold to hedge against anything. Gold, though, is getting a little bit of a bid today on a day when the markets are down. But let's head over to our 99.1 studios in Washington, D.C. for Amy Morris with world and national headlines. Amy.
All right, thank you, Kaylee. The U.S. may be turning the corner on the most recent surge in COVID-19 cases. Dr. Anthony Fauci says more people need to be vaccinated if the country is to continue that downward trend. Drug maker Merck announced last week that they've created a pill that could keep more COVID patients out of the hospital. Fauci tells ABC's This Week that is a hopeful step forward.
In the placebo versus the drug group, in the drug group, there were 0 deaths. In the placebo group, there were 8 deaths. So that is, no matter how you slice that, that's impressive.
Sources tell the New York Times that Johnson & Johnson is planning to ask U.S. federal regulators this week to authorize a booster shot of its coronavirus vaccine. Crews on the West Coast are scrambling to clean up a devastating oil spill in Southern California. It's now reached coastal wetlands and closed miles of beaches in Orange County. Ocean conservation nonprofit Oceana Chief Policy Officer Jackie Savitz.
Oil isn't just one toxic chemical. Oil is actually a toxic chemical soup. And so there's a lot of different chemicals that are in the oil. Some of them will actually dissolve in water, which is bad news for the fish.
Supervisor Katrina Foley represents the Huntington Beach area of California, and she is now calling for an investigation. Star Trek's Captain Kirk is rocketing into space this month. Jeff Bezos' space travel company Blue Origin says actor William Shatner will blast off from West Texas on October 12th. At age 90, Shatner will become the oldest person in space. He'll join 3 others aboard the Blue Origin capsule. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg.
If knowledge is power, the Bloomberg Terminal is your power up, connecting you to real-time financial data, market-moving news, powerful analytics, and an influential network of financial decision makers around the world. Share ideas, negotiate trades, and gain the insight you need to make more informed decisions. See how the terminal can take your workflow to the next level at Bloomberg.com/professional.
Why get your financial news of Asia from some second-hand source?
The Asian trading day gets underway.
Business news of Asia, firsthand, direct to you.
The regulatory crackdown has been a very big issue in China here of late.
We do have energy stocks leading the Nikkei higher.
Bloomberg Daybreak Asia, tonight at 6 Eastern.
China has vowed to consolidate the country's EV industry.
On Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com.
You took the first step and quit smoking, but even former smokers may still be at risk for lung cancer. That's why SaveByTheScan.org wants you to know about a new low-dose CT scan that can detect lung cancer early. It takes only 60 seconds and could save your life. You took the first step, now take the next. Visit SaveByTheScan.org for a simple quiz to see if you're eligible and talk to your doctor about screening. SaveByTheScan.org is brought to you by the American Lung Association's Lung Force Initiative and the Ad Council.
Economics.
Chairman Powell looks brilliant.
Finance.
Some breaking news for you. A share sale.
Investment.
The narrative of the reopening trade has changed.
The Bloomberg Surveillance Podcast.
Do you want some volatility, Tom? Please. Do you want me to go there?
Tom Keene, Jonathan Farrow, Lisa Abramowitz, and the names that shape the world's markets.
Joseph Stiglitz of Columbia University, the laureate.
Bloomberg Surveillance. Listen today at Bloomberg.com, the Bloomberg Business app, or subscribe on Apple Podcasts.
This is the story of a very special woman. Just a few knew about her superpowers. In a matter of seconds, she turned herself into a great mathematician. She masqueraded as a regular person at work, but as a superhero at home. Everyone knows her as Gabriella. I still call her Mom.
Your hero needs you now, and AARP is here to help.
Find the care guides you need to help, complete with tips and resources at aarp.org/caregiving. Brought to you by AARP and the Ad Council.
In-depth analysis, concise reporting, need-to-know global business news. Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets, and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscriptions. When will you be able to go to a meeting where nobody smells like hand sanitizer? Who knows? But we can give you the latest business and financial news, fragrance-free.
Let's tease out some of what you just said.
Are there tools in the toolbox for the Fed?
Does that point to the need for continued monetary support?
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com.
You do realize the mark that this is having on a younger generation.
Bloomberg, the world is listening.
I want to get back to being in my community group.
I want to continue having a soccer season.
So I can throw parties again.
So I can go to her parties.
It'd really be nice to dine in instead of getting delivery for a change.
So I can feel safe and protected for myself and my students.
We each have our own reason for why we're getting vaccinated against COVID-19. What will yours be? Visit getvaccineanswers.org for information on the COVID-19 vaccines. It's up to you. Brought to you by the Ad Council.
What is dedication?
The thing that drives me every day as a dad is Dariana. We call him Day for short. Every day he's hungry for something, whether it's attention, affection, knowledge. And there's this huge responsibility in making sure that when he's no longer under my wing, that he's a good person. I think the advice I would give is you don't need to know all the answers. The craziest thing was believing that your dad knew everything. So as a dad, you felt like you had to know everything. You had to get everything right. It's okay to make mistakes. As long as it's coming from love, then, it kind of starts to work itself out. I want him to be able to sit back one day and go, we worked together, we did a good job.
That's dedication. Find out more at fatherhood.gov. Brought to you by the U.S. Department of Health and Human Services and the Ad Council.
Your business landscape is ever-changing.
There could be a lot more selling to come.
Ours is too.
Just getting some headlines I want to bring to our audience.
The president's saying that this is a pandemic of the unvaccinated.
We have something else in common.
Small caps continuing to feel the pressure.
We seek out the latest business news wherever we are.
A deep drop in Asian equities overnight.
Let's bring you some breaking news in terms of earnings.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Stocks are down, and they're not gently down, as the sell-off in tech stocks has resumed in the middle of a threat of persistently high inflation. The S&P fell more than 1%, dipping below its 100-day moving average, while the NASDAQ is down more than 2%. Just how far? Let's check it. The S&P is down 1.3%, down 57. The NASDAQ's down over 1%, down 353. And the NASDAQ is down 2.1%, down 306. The 10-year is down 5/32, the yield 1.47%. West Texas Intermediate crude is down 2 3/4% is up 2 3/4% at 77.94 a barrel. COMEX gold is up 0.3% at 17.6450 an ounce. The dollar yen is at 110.75. The euro $1.1620. The British pound $1.3606. Amazon.com shares are down sharply, taking the e-commerce giant into negative territory for the year. Right now down 2.5%. That is a Bloomberg Business Flash. Kaylee Lyons and Mrs. Abramowitz on Bloomberg Radio.
Madam Lisa Abramowitz and I myself, Kaylee Lyons. The boys decided to take a long weekend.
I know, and we get to sit here and make fun of everything, basically, sit on their show. No, honestly, they're nice to lend it to us on a day that actually is fascinating in markets, where you see this shift to this idea of what happens when you have slowing growth and higher prices, this sort of realization that this isn't going anywhere anytime soon. Excuse me. And the real question to me is this a buying opportunity, or is this sort of an ongoing process of repricing that has more to go?
Well, it's so interesting because we continually see dips bought in this market, although it does seem like that dip buying has lost a little bit of its gusto recently. When we've started to see these drawdowns, you don't see the ferocious buying coming back in. But to your point about kind of that stagflation narrative, Lisa, the note from Andrew Garthwaite last week over at Credit Suisse really stuck out to me, because he said, if you want to hedge against stagflation, what you buy is energy, because that is the only sector that will outperform in a world where inflation expectations are going up and PMIs are going down. And what have we seen over the last month? What are we seeing today? It is energy far and away the outperformer while everything else is down. It is literally exactly what we're seeing.
Let's put this into perspective and give some numbers behind it. The NASDAQ is down more than 7% in the period. S&P down more than 5%. An index of treasuries down more than 2%. Oil up 12%. So there you go. I mean, this whole idea, and I think that with oil prices, there is this question of what's the circuit breaker for prices continuing to go up at a time when you have supplies that are not coming back online, as OPEC Plus said. You have demand picking up, and you've got the end of Delta.
Yeah, exactly. And of course, those higher oil prices just feeding into the inflationary narrative. So let's get more on that now with Jeffrey Cleveland. He is chief economist at Payden and Regal. So, Jeff, I don't know how much of Lisa and I's conversation you just heard there, but talking about the inflationary forces at work in this economy, do you think that central banks like the Fed are underestimating it still?
No, I don't think so. I think this is, very difficult topic and popular topic among investors, but and there's a lot of noise. So, but you have to go back to taking in maybe a longer term perspective. Commodity prices, the price of oil, for example, doesn't tend to give forecasters such as ourselves a good lead on where inflation will be in, a year's time. And I think central banks know that, and they're taking that into consideration.
Although this is really dangerous to say. These are, I think, this time is different, the four most dangerous words in the economics profession. The idea here that we have oil prices that are climbing at a time when supplies might not naturally increase to compensate this. The business case has changed in an era that's trying to decarbonize. How much does that change the backdrop for you?
It does. It's a factor, but I think I always come back to, okay, when you're talking about inflation, you're talking about a general increase in all prices, right? You're not just talking about particular sectors. And if, what we're seeing is driven more by the supply side, which is the case in a lot of areas. We did our chart of the week, for example, on natural gas prices on Friday. And, there are some, very interesting supply side stories there that I think explain a big chunk of the move. If it's coming from the supply side, I don't think that's inflation. That's really the key. It's something, idiosyncratic. And it seems like, the difficulty right now is we have a bunch of these type of stories piling up all at once, right? So you have the crude oil stories, you have natural gas, we have bottlenecks in all kinds of areas. I attribute that to this is just a very unique macro environment. But I still would caution investors from jumping to the conclusion that we're going to have a persistent inflation from here. I think you can fall back on some pretty good, reliable indicators. One we got on Friday, for example, in the U.S., in that personal income and spending report, the Dallas Fed tabulates the trimmed mean PCE. It's an alternative core inflation measure, and it's hanging in there right around 2% year over year. And I think that's where, when the dust settles on all of this, we will see consumer prices right around that 2 to 3% range.
Well, and a huge question within this, Jeffrey, is how much wages are rising to meet higher prices on pretty much everything you can think of at the pump, at the grocery store, on your holiday gifts. We obviously have the jobs report coming up on Friday. I would argue it's going to be a pretty big one, given September is supposed to be the month where kids are back at school. Those additional unemployment benefits have rolled off. It's supposed to be the great return to the labor market. Do you think that actually materialized?
I'm a little skeptical. I think, we saw a very weak August report that was driven in large part by the slowdown in leisure and hospitality. I don't know, just anecdotally walking around Los Angeles, for example, if we saw a big surge in hiring in the month of September, I think we're still under the weight of the pandemic, of the variant, at least for the September data. So maybe that story will have to wait for in the fall. I'm hopeful that I'm wrong and the labor markets bounce back much more quickly. On the wage question, though, that you brought up, I think it's a really essential one. And the only thing I could say, I would urge investors, again, to look at the Atlanta Fed wage tracker, and you can break down the different categories by, income level, by hourly versus non-hourly workers. And I think what you'll find is we are seeing wage pressure, no doubt, but it is confined mostly to the lower wage tiers of the spectrum. So definitely seeing a lot of upside pressure there on wages. That affects businesses. That affects small and medium-sized businesses, yes. But if you look at the broader wage trends, you can look at a median, wage growth. It's still running 3 to 4% per annum. Nothing worrisome in terms of wage price spirals. So I think investors, again, that we're trying to look out a year from now and understand where inflation might be. And the wage data is not telling us a worrisome longer-term story. If you recall the 1990s, I'm sure you do, right? We had 5 to 6% median wage growth, and we still had, moderate inflation right around 2 to 3%. So you can even see wage growth pick up from here, which I hope it does, and still not have a runaway inflation story.
Which really raises the issue, Jeffrey, of how much is being priced in.
If knowledge is power, the Bloomberg Terminal is your power up, connecting you to the real-time financial news, data, and analytics that can take your workflow to the next level. Power up at Bloomberg.com/professional.
Bloomberg Money Minute. Airline losses from the pandemic set to surpass $200 billion as travel curbs weigh on demand well into 2022. That's coming from the International Air Transport Association. Passenger traffic is expected to reach 40% of pre-pandemic levels this year. Venom, Let There Be Carnage generated the highest opening weekend box office of the pandemic. The movie was released exclusively in theaters and brought in $90.1 million in North America, according to ComScore. A new Snickers bar will be hitting Walmart shelves this month. Snickers Cinnamon Bun features cinnamon bun flavored nougat mixed with crunchy peanuts and topped with caramel. Well, the big event for market watchers will come on Friday with the release of the September jobs report. Economists are forecasting a rebound in hiring, a gain of 500,000 jobs. Ahead of that key event, stocks are lower with the Dow dropping 340 points. Courtney Donahoe, Bloomberg Radio.
To some, the sound of a baby babbling doesn't mean much, but that's not true. They're testing out vowels.
Pandemic related, we think it is bottlenecks on the supply side that have knocked down our growth estimates. And some of that we will get payback on in 2022, we think. So it's not a more, worry. Where we would get more worried, I guess, on the growth front is if it was demand had slumped off. And that's not really what, we think we're seeing here. Demand, particularly from consumers and households, will remain very, very strong, we think, throughout this rest of the year and into 2022. So it's not a demand slump type story. It's these idiosyncratic supply side things that are holding back growth. So that's one part of it, just discerning, okay, what is driving the slowdown that we're seeing? And then the inflation, is inflation going to remain elevated, on a sustained basis, more than a couple of quarters? And we think the answer, again, as I belabored already, is no. So I can't put myself in the stagflation camp quite yet.
All right, Jeffrey, I want to ask you, you were talking about all the noise that's out there. There certainly has been a lot of noise down in Washington, D.C. I know that's pretty much always the case, but it seems like it's gotten a lot louder as of late. You have the ongoing question mark around the debt ceiling. You have discussions around the infrastructure package really at a stalemate now, an October 31st deadline. How would it change your view on the U.S. economy if we don't see that trillions of dollars in longer-term economic spending materializing?
Well, I think we will get something done. I can't tell you when. It's impossible to figure that out. But I don't think it's going to be the $3.5 trillion. So to the extent that, and it does seem, when you look at the headlines and market movements, market is sort of fixated on that $3.5 trillion number, and that could disappoint some investors if we don't get it. I don't think we're going to get that number. For us, though, the big fiscal pulse already happened. We're already on the other side of it. You look at transfers to households. You can look at, quarter over quarter. Those were actually down in the second quarter relative to a year ago because we saw this huge surge in spending or transfers to households. That's done. And for us, that's really the more critical question. Households, fortunately, they're going back into employment. They still have pretty ample savings, so that'll be good. But the big party in terms of the fiscal side, I think, is done. So that's, I think, something to keep in mind. For investors too, the debt ceiling is important. I guess we're playing a game of brinksmanship here, and it probably lasts, into mid-October, maybe later. Ultimately, we think that does get resolved, perhaps something similar to what we saw in 2013. I think the other Washington story, though, is the Fed board, the possible departure of Jerome Powell, and then two other spots that look like they're going to open up. And that could change. That could change. I think what that gives you is a more dovish Fed. And if that's right, that is more important, I think, for markets, for risk assets than, the debt ceiling or, I hate to say it to my political strategist, but I think the Fed will ultimately be more important than the size of the fiscal bill, the budget that ultimately they get decided on.
Monetary policy for the win. Thank you so much, Jeffrey Cleveland. He is chief economist at Payden and Regal. Let's head over to Washington, D.C. now, 99.1, and get our world and national news with Amy Morris.
All right, thanks, Kaylee. It's being called the biggest leak of offshore banking data in history. It's a new report dubbed the Pandora Papers. It includes millions of leaked documents detailing how the wealthiest among us hide their assets from authorities and tax collectors. Reporter Will Fitzgibbon of the International Consortium of Investigative Journalists tells ABC that their investigation shines a light on trust companies based in the U.S.
This investigation should make us all wonder how and why the world's rich and powerful are able to play by different rules that grant them financial and business benefits that the rest of us don't have access to.
The report also looks at trust companies in South Dakota, Nevada, and Delaware, where critics say weak transparency laws allow the wealthy to hide their fortunes. The Supreme Court's new term is underway, and the agenda is packed with hot-button issues. The list over the coming months include abortion, gun regulations, and religious rights. The conservative majority on the High Court prompted a firestorm when it recently declined to temporarily block implementation of that controversial new abortion law in Texas. In-person oral arguments are resuming after more than a year and a half of virtual hearings during the COVID pandemic. And Florida Governor Ron DeSantis says his wife, Casey, has been diagnosed with breast cancer. He did not say what stage the cancer was detected. The governor and his wife have 3 children. October is Breast Cancer Awareness Month. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg. Let's get a business flash now with Bloomberg's Greg Jarrett.
We're calling them session lows, Amy. Thank you. Stocks are down as a sell-off in tech stocks resumes amid the threat of persistently high inflation. The S&P is down 1.5%, down 66. The Dow is down 1.25%, down 430, and the Nasdaq's down 2.3%, down 333. The 10-year's down 5/30 seconds. The yield is now 1.48%. West Texas Intermediate crude is up 2.75% at $77.95 a barrel. COMEX gold's up 0.4% at $17.65 even per ounce. The dollar yen 110.92. The euro $1.16.19. The British pound $1.36.05. Deals by real estate investment trusts total $108 billion this year through September, beating the annual record as ample capital fueled transactions in the recovering economy. That is a Bloomberg Business Flash. Bloomberg Markets continues as we wait for the President of the United States, Kaylee Lines, and Lisa Abramowitz.
Thank you so much, Greg Jarrett. What did he say? He's one with 3 women. He's alone.
Yep.
You know, I think he's feeling
Girl
like
power
he misses out.
plus
Absolutely.
Greg Jarrett.
So here's another girl power. Shonali Bossack joining us here in our Bloomberg 1130 studios. Our Wall Street correspondent. A question here as we get back to work, what they are doing. I want to start there. I know that there was a story from Axios about what's going on with the JP Morgan chief. What they are doing. I want to start there. I know that there was a story from Axios about what's going on with the JP Morgan chief. But I do, Jamie Dimon and salaries and all that, and that's sexy and great. But I do want to get started with the return to work and how much it's being delayed versus brought forward as certain banks sort of take the lead. Is there a feeling that the ones that are actually mandating office time are doing better?
So that's been the case all year. It depends on the business in reality. So the folks that have, and it's funny, we say this as I was at NASDAQ this morning, and the firms that have done more in terms of investment banking, Goldman Sachs, JP Morgan, they have won more business. Now, they're also getting on the road to see clients as well as coming into the office themselves. So how much of this is coming into the office, having the camaraderie, looking across the corner and being able to talk to your employees and your colleagues, and how much of it is actually getting on the plane and meeting your clients where they are and being a little more aggressive than your competitor in getting there. But the other businesses, trading as well, there was a sense at the beginning of the pandemic that if you were there, that you won more business at the end of the day. You could also argue is if you're going to put more money down and use more balance sheet and be more for your clients in that way, that's another way that people win business. So you're right. The investment bankers are back earlier, right? We reported last week Perella Weinberg would be back by November. They've been preaching flexibility all year. They said they will stay flexible, but people should start getting back to work, especially as they're heading to galas all throughout New York.
Obviously, there's been kind of two thematic trends here that we've been following when it comes to the world of Wall Street. One is the return to office, and the other one is just that junior bankers are getting paid so much money and making everybody in other industries jealous because it's just continually one bank trying to one up the other one on what they are paying their people. And that really comes back to this Jamie Dimon story. He talked to Axios, was asked about the $31.5 million in compensation the JP Morgan board awarded him last year. And he said, look, it's part of an umbrella. We have to retain senior management, and that's kind of what the board is doing here. So it really just all comes back to the competition for talent in banking.
It does. But also, I pulled up some stats before this to give some perspective. So how much does Jamie Dimon make relative to the typical employee at JP Morgan? How much do you think a standard employee at JP Morgan makes?
Well, are you including all of the line tellers?
Yes.
So that's the thing. It's probably like average, $60,000 a year.
It's $80,000.
Wow. Big. All right, carry on.
Yeah,
Gold star, Lisa.
You are very close.
Thank you. It's my only one today. Carry on, Shonali.
Jamie Dimon makes almost 400 times a single employee at JP Morgan. So he makes 395 times a medium employee. So let's put that into perspective too. The median employee at JP Morgan, even at $80,000, makes more than the typical American, and 5 to 1 is actually better than a lot of places you see in the rest of corporate America. So it's a weird thing because, yes, it's a lot of money to make relative to your typical employee. But if you look, this is a much bigger problem than the financial services industry and a much bigger problem than JP Morgan alone.
Why do we care?
Well, the question is,
it's $31.5 million.
But this is important. Is this just another illustration of the divide, of the wealth gap in the United States? Or is this something that he has not done to warrant it? Or, for example, that he hasn't earned it in the same capacity as someone else, that he's overly compensated? They're two distinct issues.
It's such a loaded question because we know that bankers, like a lot of executives, technology executives, are paid a lot of their total compensation in stock. Stock markets have surged. They don't pay taxes right away on that stock. That's another part of that question mark about, should they be, should they not be? And on top of that, it's, why is their wealth so uneven relative to their median employee? And should that gap be closed a little bit? Again, it's a problem you would have to look at across all of corporate America and beyond the financial services sector. But banks, as we know, are highly politicized, especially for making money in the middle of a pandemic.
And it isn't just about wealth inequality either. Racial inequality is a huge issue as well. And that really was what the entire Axios conversation with Jamie Dimon was predicated on, around the bank's efforts to help combat racial inequity. We saw a lot of banks and really, companies all across the spectrum last summer around the protests over the death of George Floyd, meeting the moment and saying, we're going to promise to do all of these things. Has Wall Street followed through on those promises?
So one person I spoke to directly about this issue was Sheila Bair. right? Former chair of the FDIC. And the one question I asked her is, JP Morgan's $30 billion enough? This is across different minority groups to advance racial equity. It's towards lending programs, small businesses, a lot of different programs for a wide range of minorities. She said no, right? She very clearly said no. And JP Morgan's, by the way, is the biggest effort that we see. Goldman has another effort that involves outside capital as well for the $10 billion towards black women alone, by the way. That's why I make the distinction between different minority groups. So a $10 billion, another eye-popping figure. But you have to go much further down to find as much money being given. Usually it's $1 billion at a time for banks with trillions of dollars of assets under their balance sheet.
We were just having a conversation, just shifting slightly to markets and kind of what we can expect. We were just talking about the potential risk factors right now that people are looking at. One of them is a potential change in composition on the Federal Reserve Board. The idea of what happens if Jay Powell is replaced and what happens if that person takes a stronger hand when it comes to regulating Wall Street, which is, I think, what a lot of the progressive wing of the Democratic Party would like to see. How concerned are people in the banking industry who you speak with about perhaps a clampdown? Irrespective of what happens in the market.
It's not just Jay Powell either. It's the vice chairman of supervision, Randy Quarles. They are facing the potential of onerous regulation once again. But it's not just that they may be regulated more significantly. It's that they're watching all of these other players, fintech companies otherwise, soar. Mm-hmm. And, you see that best in the exchange arena with Coinbase and its market cap vis-a-vis New York Stock Exchange or NASDAQ. By being able to play in a place that is not regulated, they have made more money and have garnered a larger market cap for it.
Let's talk about the money they are making, Shonali, because believe it or not, and I don't know how this is possible, it is almost bank earnings again. Mm-hmm. A week from Wednesday, JP Morgan will report. What are your big themes as we head into bank earnings season this time around, knowing they're facing really tough comps, knowing that volatility is much more subdued than it was, during the height of the pandemic, and just knowing what you know about the activity we are seeing in investment banking out there?
Do they believe that the consumer sentiment is a little overstated right now? Do they believe that consumers are as healthy as and willing to spend, rather? They're saving, but are they willing to put that money to work on top of saving? Also, the products that they get money from, mortgages, for example, with JP Morgan, with the prospect of mortgage rates rising, will they be able to keep consumers hanging on, especially as so many can't even afford homes right now with the prices soaring? Then also just competition, right? I mean, we have been fluctuating quite a bit here, but, PayPal and Bank of America, their gap has been closing and diverging all year. So to what extent are they investing aggressively to keep up?
So just to provide everyone with a sense of what we're doing today, we are expecting President Biden to give a speech shortly, in any minute, on the debt ceiling, on potentially lifting the debt ceiling. As we talk about debt, Shonali, I just want to wrap this up with how important the idea of loan expansion is. How important is it to see more underwriting of loans at Wall Street banks?
It's fundamental. It's everything, Lisa.
Great. That's all you need to know in life. What's the future?
That was all caps, underlined, bold.
That's it.
The minute
no
the
more.
party stops, the minute they stop making fees from underwriting it and trading, junk debt that is selling for nothing, right? So, and then the CLO market that underpins all of that at the end of the day, and the debt they're able to extend to private equity firms that continue doing deals. It just is a big engine that right now is working well, but as you know, when things get rough, could all shut down.
Well, no, but in terms of their loan creation, they haven't created as many loans. And how much can they rejigger that? To consumers. Mm-hmm. Yes, to consumer loan.
To consumer loans, also fundamental, because that's the part of the story that, we really have not seen take off for now more than a year and a half.
All right, Shonali, well, we know you will be here all week, next week, probably the week after, taking us through bank earnings 24/7, every hour of the day. Shonali Bostic, our Bloomberg Wall Street correspondent.
Thank to get her to stay
so
home?
much. I'm just encouraging her to go home after this and take a nap because, enjoy it while you can. All right, let's head over now to Greg Jarrett and get a Bloomberg Business Flash. Greg?
That's a magic word, nap. I'll consider that, but first I'll tell you this. The S&P is approaching down 2%. It fell more than 1% earlier at dipping below its 100-day moving average, while the NASDAQ fell more than 2%. They both continued that slide. The losses are led by high-growth tech companies, including Amazon.com and Facebook. Let me take a look here quickly at Twitter. Twitter's down 6%. Apple is down 2.8%. Drug vaccine makers were also lower on Merck and Company's announcement about the effective COVID-19 drug. Energy stocks are higher because, well, oil prices are higher. Let's look at those numbers. The S&P is down 1.7%, down 75. The Dow is down 1.4%, down 467. And the NASDAQ's down 2.5%, down 370. The 10-year's down 430 seconds. The yield is 1.47%. West Texas Intermediate crude continues its ascent. It's up 2.6% at 77.85 a barrel. COMEX gold's up 0.4% at 17.65.90 an ounce. The dollar yen, 110.88. The euro, $1.16.18. The pound, $1.36 even. B of A has launched research coverage of cryptocurrency and digital assets, not only due to the massive appetite among retail clients, but also given, they say, the growing institutional interest as well. I can tell you that Bitcoin is down 1.8% at 47,604 per coin. That is a Bloomberg business flash. Bloomberg Markets continues as we wait for President Biden, Kaylee Lines, and Lisa Abramowitz will take you there.
Yes, we will. Thank you so much, Greg. Remember, President Biden is expected to speak just any minute now. He will be delivering remarks from the state dining room on the need to raise the debt ceiling, which, of course, Senate Republicans have voted twice not to do, which is raising the risk of default. Janet Yellen saying that could come as early as October 18th, 2 weeks from today. We will bring you the remarks from the president when we get them. But we do want to focus a bit on the markets now. And one stock in particular, Tesla, is higher by about 1.5% at this point after giving off really strong delivery numbers last week. Esha Day, equity markets reporter here at Bloomberg News, is here with that story. So these numbers are really good out of Tesla.
Thanks for having me. Yes, these were blockbuster delivery numbers. The street consensus hovered somewhere around 222 to 223,000, and the number, as we know, came above 240,000. It also shows that Tesla might be handling the semiconductor shortage slightly better than other bigger automakers, given to its kind of unique supplier profile. All in all, really strong numbers from Tesla.
When you say unique supply chain profile, what exactly are you talking about? This is really important at a time when other car makers are really struggling.
That's right. Traditional car makers typically have a far more complex and many more suppliers than Tesla, just given the kind of cars it makes, right? It's a much simpler engine, so to speak. So that is probably not
Esha.
Yes.
Yeah, thank you so much, Esha. We're going to have to leave it there. We are seeing President Biden now. Let's take a listen to what he has to say from the state dining room of the White House.
And why the Republicans in Congress what they're doing today is so reckless and dangerous, in my view. Raising the debt limit comes down to paying what we already owe, what has already been acquired, not anything new. It starts with a simple truth. The United States is a nation that pays its bills and always has. From its inception, we have never defaulted. What we pay for, so it keeps us a great nation. Social Security benefits for seniors, salaries for brave service members, and benefits for veterans, and other financial obligations for our people and for our nation. We're able to meet these obligations based on the revenue we receive from taxes and based on our ability to borrow when needed. And in that case, we're able to borrow because we always pay our debt. We always paid what we owe. We've never failed. That's America. That's who we are. That's what's called for. It's called full faith and credit of the United States. It's rock solid. It's the best in the world. But here's the deal. There's a cap on what we can borrow called the debt limit. And only Congress can raise or lower that debt limit. So let me be really clear. This is really important to know. Raising the debt limit is about paying off our old debts. There's nothing to do with any new spending being considered. There's nothing to do with my plan for infrastructure or building back better. Zero. Both of which I might add are paid for. So if we're going to make good on what's already been approved by previous Congresses and previous presidents and parties, we have to pay for it. Social Security benefits. The American people are promised salaries for servicemen and women, benefits for veterans. We're going to have to raise the debt limit if we're going to meet those obligations. And raising the debt limit is usually a bipartisan undertaking, and it should be. That's what is not happening today. The reason we have to raise the debt limit is in part because of the reckless tax and spending policies under the previous Trump administration. In 4 years, they incurred nearly $8 trillion. In 4 years, $8 trillion in additional debt. In bills we have to now pay off. That's more than a quarter of the entire debt incurred now outstanding after more than 200 years. And Republicans in Congress raised the debt 3 times when Donald Trump was president, and each time with Democrat support. But now they won't raise it, even though they're responsible for more than $8 trillion in bills incurred in 4 years under the previous administration. That's what we'd be paying off. They won't raise it, even though defaulting on the debt would lead to a self-inflicted wound that takes our economy over a cliff and risks jobs and retirement savings, Social Security benefits, salaries for service members, benefits for veterans, and so much more. A failure to raise the debt limit will call into question Congress's willingness to meet our obligations that we've already incurred. Not new ones, we've already incurred. This is going to undermine the safety of U.S. Treasury securities, and it will threaten the reserve status of the dollar as the world's currency that the world relies on. American credit rating will be downgraded. Interest rates will rise for mortgages, auto loans, credit cards, borrowing. Folks, watching at home, you should know this is the Republican position. Here's it is. They won't vote to raise the debt limit to cover their own spending. Democrats voted with them to cover that spending the previous 4 years. They say Democrats should do it alone. But then they're threatening to use a procedural power called the filibuster, meaning that we'd have to get 60 votes, not 50 votes, to increase the debt limit. This would block the Democrats from meeting our obligations and responsibilities to prevent Congress from raising the debt limit. So let's be clear. Not only are Republicans refusing to do their job, they're threatening to use their power, to prevent us from doing our job, saving the economy from a catastrophic event. I think, quite frankly, it's hypocritical, dangerous, and disgraceful. Their obstruction and irresponsibility knows absolutely no bounds, especially as we're clawing our way out of this pandemic. Democrats will meet our responsibility and obligation to this country. We're not expecting Republicans to do their part. They made that clear from the beginning. We tried asking to no avail. We're just asking them not to use procedural tricks to block us from doing the job that they won't do. Meteor is headed to crash into our economy. Democrats are willing to do all the work stopping it. Republicans just have to let us do our job. Just get out of the way. If you don't want to help save the country, get out of the way so you don't destroy it. We don't have time to delay with elaborate procedural schemes, which Republicans' proposals require. Scores of votes without any certainty at all, many of which have nothing to do with the debt limit at all. And that's when accidents happen. In the days ahead, even before the default date, people may see the value of their retirement accounts shrink. They may see interest rates go up, which will ultimately raise their mortgage payments and car payments. And the American people, look, I just say it this way. As soon as this week, your savings in your pocketbook could be directly impacted by this Republican stunt. It's as simple as that. Republicans say they will not do their part to avoid this needless calamity. So be it. But they need to stop playing Russian roulette with the U.S. economy. It's one thing to pay our debts already acquired. It's another to require a supermajority to pay the debts already acquired. It's not right. Let the Democrats vote to raise the debt ceiling this week without obstruction or further delays. Democrats in the House have already passed a bill that would do that. It's sitting in the United States Senate where Democrats have the votes ready to pass it. That's the only way to eliminate the uncertainty and risk that's going to harm American families and our economy. Let us vote and end the mess. You know, we've got to get this done. We must get this done. It is, like, as I said, playing Russian roulette to play these games. We can do it this week. Just get out of the way and let us pass it. Thank you.
Mr. President, Senator Mitch McConnell says he has sent a letter to you explaining his view. Have you seen that letter? Have you communicated with him? And how dire do you believe this is if action doesn't take place in the next few days?
First of all, I did get a letter. I got it 10 minutes before I walked in here. I've read it. I plan on talking to Mitch about it. He and I have been down this road once before, back when I was vice president. And I hope we can have some intelligent and honest conversation about what he's proposing. And I think the easiest way to do this, and if the Republicans would not use the filibuster, would be to let us vote on what is already in the Senate right now, passed by the House, to raise the debt limit. And we could do that in the next several days.
Thank you, Mr. President. You've often touted your experience in the Senate, your 36 years in the Senate. Your aides have talked about your abilities to be a closer on deals involving legislation. Why were you unable, Mr. President, to close the deal with members of your own party on key parts of your legislative agenda last week?
I've been able to close a deal on 99% of my party. Two people. That's still underway. I don't think there's been a president who's been able to close deals that's been in a position where he has only 50 votes in the Senate and a bare majority in the House. This is a process. We'll get it done.
It sounds like you're putting the blame squarely on two U.S. senators for your inability to close that deal, Senator Sinema and Senator Manchin. Am I incorrect? Is that who the blame lies with?
Look, I need 50 votes in the Senate. I have 48.
Leader Schumer has vowed not to raise the debt ceiling through the reconciliation process. So ultimately, Leader Schumer has said he won't raise the debt ceiling through the reconciliation process. So ultimately, if push comes to shove and Senator McConnell does not change his position, what is more important, that position that Senator Schumer has or raising the debt ceiling? And then I also have a question for you on Ethiopia.
I'm going to answer one. I'm not going to answer Ethiopia. Let's stick on the debt so we don't confuse the American people. Number one, the issue of reconciliation, which is like code to the American people. What's reconciliation? There is a process that I understand the Republican leader is willing to initiate, go through, that would require literally up to hundreds of votes. It's unlimited number of votes having nothing directly to do with the debt limit. Could be for everything from Ethiopia to anything else that has nothing to do with the debt limit. And it's fraught with all kinds of potential danger for miscalculation. And it would have to happen twice. So you could literally have several hundred votes over the next number of days. Everything else would come to a standstill, but you still find yourself in a situation where at the end of the day, we may have passed something that in fact then has to be undone again by either Democrats or Republicans. It's an incredibly complicated, cumbersome process when there's a very simple process sitting out there. Sitting at the desk in the United States Senate is a bill passed by the House saying we Democrats will raise the debt limit, take responsibility for raising, even though we didn't, some voted to acquire the debt as well. We'll go ahead and do that. That's the way to proceed.
But if it comes down to reconciliation or raising the debt ceiling, which position would you take?
I'm not going to cross that bridge till we have to get there.
Address the allegations of genocide and why you haven't yet imposed those sanctions that you authorized 2 weeks ago, sir?
Speak to that later.
Regarding your Build Back Better agenda, we know the top line figure from Senator Manchin is $1.5 trillion. Senator Kirsten Sinema has yet to really give that number where she's willing to go, how high she's willing to go. But she says she's negotiating good faith at the White House. What is her figure?
I'll let her tell you that. I don't want it. We're in negotiations.
Between 1.5 and 3.5? Is it higher at least than the 1.5?
I'm not going to negotiate in public.
Mr. President,
How is what the Republicans are doing now any different from when you opposed raising the debt limit as a senator during the Bush years?
Because we weren't calling for filibuster. We did not requiring 60 votes, and it was a straight up and down vote.
Mr. President, you're talking about how you have 48 Democratic votes right now. The other two have been pressured over the weekend by activists. Joe Manchin had people on kayaks show up to his boat to yell at him. Senator Sinema last night was chased into a restroom. Do you think that those tactics are crossing a line?
I don't think they're appropriate tactics, but it happens to everybody. From the only people it doesn't happen to are people who have Secret Service standing around them. It's part of the process. Yes, sir.
Just really quickly, a lot of people have been trying to attack immigration.
Mr. President, I know you don't want to comment on other senators' positions in the negotiations, but what do you think the size of the reconciliation package should be? What specific dollar figure?
Well, I laid out what I thought it should be. It's not going to be that. It's going to be less. I mean, look, the legislation, both the Build Back Better piece as well as the infrastructure piece, are things that I wrote. These didn't come from, God love him, Bernie Sanders or AOC or anybody else. I wrote them. I disagreed with Medicare for All, for example. I disagreed, but I laid out what I thought would be important. For example, I think in the Build Back Better program, it's required that we, in fact, have the best education available to us, and I'll be speaking to this in detail tomorrow. But look, here's the situation. How can we, in an ever-competitive world, increasingly competitive world, how can we not meet the educational standards at least other countries are working toward? Nobody is reducing the number of years they want their children to go to school or people to go to school. You've heard me say it before, as my wife says. If any country out-educates us, they're going to out-compete us. Look what China's doing. Look what the rest of the world is doing. They're investing. They're also investing in things that relate to ability for people to go to work and stay at work. We have several million women who can't go back to work because they don't have any way to take care of their children. So to give a tax cut to a working mom to be able to afford daycare, is that bad? Is that a bad idea? I think it's a darn good idea. We'll get people back to work. So there's a lot of things in the legislation I'm going to be talking about across the country that I think the American people overwhelmingly support. But the idea that somehow this is somebody else's legislation, this is what I wrote.
Would you accept a $2 trillion, say a $2 trillion reconciliation bill? Would that be acceptable to you?
Again, as you know, it's not a smart thing to negotiate with yourself in public. Let's see, we're in the process of continuing to talk to all the parties and see what we can get done.
Sir, thank you so much, Mr. President. Two questions. First, you said there was progress in the negotiation, but today you say you only have 48 votes. So what is this progress? And another question on the foreign, an international news that was big yesterday about the Pandora Papers. Do you have any reaction? You put fight against corruption as the core.
I'm sorry, didn't get the last
Pandora Papers? The Pandora Papers? you said that you could fight against corruption in the core of your national security policy. So what is your reaction, and do you plan to do anything about it?
We're looking at that right now. The first part of your question was what?
Was about progress. What does progress look like for you in the negotiations?
Winning. That's the progress. The last question.
The Hyde Amendment, I just want to be very clear. Can you guarantee that the U.S. will not breach the debt ceiling, that will not happen?
No, I can't. That's up to Mitch McConnell.
So it is possible that the U.S. will not pay its debts. That is
I can't believe that will be the end result because the consequence is so dire. I don't believe that. But can I guarantee it? If I could, I would, but I can't. Thank you all very much. Appreciate it.
Senator Manchin says the deal is off if the Hyde Amendment is not included. Do you support that?
For Bloomberg Television and Radio, we, of course, have been listening to President Joe Biden speaking from the White House about the debt ceiling, his concerns about it. He did not mince words, the president. He said that what the Republicans were doing was reckless and dangerous. He called it disgraceful and irresponsible. The way he characterized it was that the raising the debt ceiling was really to account for debts largely already incurred. He specifically pointed at the prior administration, saying that under President Trump, the debt had been increased by some $8 trillion. In fairness, some of that was bipartisan to try to get us out of the pandemic. It went beyond the tax cuts. He also warned Americans they could affect them as soon as this week in their savings and how their cost of credit might go. He also warned it might affect the United States dollar as a reserve currency. And finally, he said, look, we'll do all the work, just don't get in the way. And that's the way he characterized the filibuster, which is the way the Republicans would stop a majority vote in the Senate. He said the Democrats are willing to pass this, just don't use that procedural device to get in our way. We go now to our Washington correspondent, host of Sound On every day at 5 p.m. on Bloomberg Radio. He is Joe Matthew. So, Joe, the president seemed quite agitated.
Well, yeah, and some of the most full-throated remarks that we've heard from any Democrat on this, certainly the president himself, David, he described this debt limit as a meteor headed to crash into our economy. And to your point, tried to bring this home for people to say that your retirement accounts could begin to shrink as we get closer to this debt limit. Of course, we've been looking at something around the 18th of October for this to be an issue, but really trying to bring it home for people, David, because we've heard so much about this, a lot of it from Republicans who've tried to attach this raising of the debt limit to increased spending by Democrats. That was the real point the president wanted to make today. Aside from Republicans, to your point, and their behavior that he called disgraceful, shameful, dangerous, he wants people to understand that this is a backward-looking mechanism, that it pays for money already spent, kind of like a credit card, as opposed to raising our debt limit for future Democratic spending. This is a tough one, David. Whenever this debt limit issue comes around, you hear from politicians who try to kind of point this in one direction or the other to appeal to their own political angle here. And the president trying to speak directly, as he said several times, let me be clear. This is about past spending, not future spending. And we'll be curious to see how this plays out with Mitch McConnell, who, of course, sent a letter just today to President Biden saying, thanks, but no thanks. You're on your own in dealing with this, David.
I was just going to raise that because the president said that he'd gotten that letter just 10 minutes, he said, before he walked out to address this issue. And in that letter, the minority leader, Mitch McConnell, said basically bipartisanship is not a switch you can flip on or off. Yeah. To some extent, the Republicans are saying, look, you've put through a lot of things, Democrats, without our votes. You didn't seem to care. Now all of a sudden you care. Why should we play ball with you?
I don't know how he got that letter so late, David. It was on the terminal certainly more than 10 minutes ago. It does seem like I should have written this whole conversation in a letter here. Nancy Pelosi sent a letter over the weekend to her caucus. Chuck Schumer sent one to his saying, we can't wait around to do this. It will likely start now, and it will likely be a working weekend this weekend, David, particularly if Democrats have to do this through reconciliation. That would be the other option. We understand that the Senate parliamentarian has cleared the way for that to happen, but we've talked about this before. That will likely take at least 2 weeks and 2 vote-a-ramas, which could make things a bit complicated on the timeline. It's not just about raising the debt ceiling in time to avoid a default. It's getting too close to the cliff and potentially prompting a downgrade on our credit. David?
Which has happened before, as you know, in 2011. Thank you so much to Joe Matthew. As I said, he is host of Sound On, airing every day of the week at 5 p.m. Eastern Time on Bloomberg Radio. Well, there's a lot of nervousness in the markets, partly perhaps because of this debt ceiling, partly because of concern about inflation and concerns over longer-term supply chain challenges. To take us through the economics right now, we welcome back Tiffany Wilding. She's PIMCO North American economist. Tiffany, always great to have you with us. I want to talk about inflation, maybe even stagflation. But before that, let's pause for a moment on this debt ceiling. The president is warning we're really headed for a problem here. Are we seeing that in the economics yet?
Well, certainly the markets have started to, price in, some probability of, sort of a situation we have to prioritize payments or whatnot. You actually see the bill market, bill yields elevated for around the time that, that we're going to see the so-called drop dead date. I think overall, like we continue to expect Congress ultimately to come together. I think the fact that Democrats have shown a willingness to start the reconciliation process, suggests to us that, the probability that we get into these more catastrophic scenarios has declined a little bit because ultimately, Democrats will get this done through reconciliation, although it might be right up until the timeline that October 18th period that Janet Yellen has suggested. Ultimately, we think this gets done. But of course, it probably won't be a linear line from here to there. It'll be messy in between. Historically, what we've seen for markets is that, they tend to get more nervous kind of at the last minute. So markets expect this to, broader markets, expect this to happen. But then you kind of get like a week or maybe even two before the drop dead date, and it doesn't happen. That's when really markets start to get shaky. You start to see elevated volatility. So, I guess that's what we would expect again as that drop dead date nears.
Yeah, and however it plays out, we're likely to know the answer. If we believe Treasury Secretary Yellen, within the next couple of weeks, we'll know. In the meantime, the markets are a little nervous today. I'm not sure it's about the debt ceiling. There's a lot of concern out there about inflation that seems to be affecting the markets right now. And there are some indications, right, Tiffany, that maybe inflation might be around a little longer, be a little worse than what we've been told?
Yeah, so I think that there's been, a series of sort of what I would call, unfortunate shocks, which appear to be increasing and keeping elevated inflation maybe a little bit longer than we had initially expected. So, I guess just to caveat this, we're still expecting inflation, it's currently running at 5% or a little bit below in the core measure. We're still expecting that to come down to closer to the 2% inflation target that the Federal Reserve has for next year. But it does look like it could linger a little bit longer than we were initially expecting. So we've had, high demand for goods as a result of this pandemic being pushed up against supply chain constraints. And that's created just a complete mess in logistical sectors. Obviously we have a lot of ships. I think there was 70 ships that are still, off the coast of California waiting to unload goods. And now the newest thing, of course, is the potential for some more meaningful disruption in actual manufacturing activity in China, maybe even in Europe, as a result of this global power supply shortage that we're seeing. I think it's created a very uncertain situation and one that's somewhat dependent on the weather this winter. But it's certainly possible that we could see prices for a broad range of retail goods in the U.S. Go up going into the winter and even into the first part of next year as a result of these supply shortage global power supply shortages.
And Tiffany, finally, we do hear talk now about stagflation. I must say the people that raise the question pretty quickly say we're not talking about the 70s. We're not going back to the 70s. At the same time, we are seeing growth projections coming down. At the same time, we're seeing inflation coming up. Certainly the numbers on Friday gave some pause for concern. What do you make of the concern about we might get tapering down growth at the same time we're getting tapering up prices?
Yeah, and our forecasts have done something similar. So we've downgraded the growth outlook as well as upgrade our inflation forecast. So yes, that does have a bit of a whiff of stagflationary pressures. But again, we would characterize this as sort of just related to, dynamics that happened as a result of the pandemic. And it was a result of closing down and then trying to very quickly reopen economies. So I think we're going through this transition period. There's bumps along the road. But as we get into next year, we